Okay, weird. We had a black screen, but we're good. We should be good to go. I think we should be okay. Sorry. Retail sales data is out, folks. 8:30 a.m. It came out this morning, and let's just say this retail sales data was way better than expected. For those that just had a black screen refresh, we should be good now. Sorry for that. That was very random, but we are back here and we're good to go. So here's what we got. United States retail sales was coming in at 0.1%. The street was expecting negative 0.2%. Street was expecting negative 0.2. We came in at 0.1. Now, this is really important. The stock market's up right now. Palantir, which we'll talk about, also got a deal in the pre-markets, is at $37.08. It's up another 2.12%. We'll talk about that in a little bit. I think Palantir is up right now primarily because of this retail sales data. The entire market is up right now because of this retail sales data. The U.S. consumer, once again, continues to be resilient and spend. Now, why does this matter? Retail sales data in the month of July was expected to be 0.4%, came in at 1%, much higher than expected. We looked at this on the market close last night. We looked at the expectations. It was supposed to be negative. I was kind of surprised that it was going to be negative, but you can make some argument that, hey, August is one of those seasonal months where people tend to not spend that much. They're saving up for back to school, saving up for the holiday. So maybe you just don't get that much spending. No, we came in positive. So in July, we came in positive by 0.6%. This time we were supposed to go negative, and we actually came in positive by 0.1%, which is very, very good news for the market. Now, there's a couple of implications here in regards to inflation and the Fed decision that is tomorrow, which is going to be a very, very important decision that I want to talk about. But before we get into that, here are the categories that were up and down. So biggest increases for August retail sales, we had sales at miscellaneous stores, non-store retailers, health and personal care stores, and then sporting goods, hobby, musical instrument, bookstores, etc. So kind of your Dick's Sporting Goods, your kind of Hobby Lobby, luxurious stuff, not super luxurious, but stuff that people don't need to buy. Like you don't need to buy musical instruments, etc. But that stuff was up in the month of August. Declines, the biggest declines we had in August were electronics and appliances, food and beverage, furniture and home furniture, clothing, general merchandise. This is your Dollar Trees, Dollar Generals, which kind of makes sense because their earnings weren't the best. Motor vehicle and parts dealers. This also makes sense because people still aren't buying used cars as much as they were buying before, or even new cars because interest rates are still high. And then gasoline stations. This makes a lot of sense because gas prices went down in the month of August pretty dramatically. In New Jersey, we're nearing 280, I think 290 per gallon right now. So overall, although we had some pretty strong declines in these categories, the increases that we had were good enough to compensate for the fact that retail sales was higher than expected. Now, what does this mean in the context of the Fed? Well, if we go to our probabilities, we'll talk a lot more about this today on if we're going to get 25 or 50. The probabilities are still 69% for 50, 31% for 25. Let's refresh it again, see if anything changed. Now it's 67-33, basically the same. So even after this retail sales data came out, the market still believes, hey, there's a 67% chance that we are going to get 50 basis points of cuts versus 37. Before we transition into Palantir and talk about the new partnership they got today, why does this matter in the context of inflation? So some people are saying that, hey, retail sales data, good, but what does this mean for inflation? Does that mean inflation is going to accelerate? And does that mean that the Fed is not going to be able to cut as aggressively? I think there's 2 points of analysis here. Number one, I personally don't think inflation is going to reaccelerate just because we had good retail sales data. This is not like a massive beat. It's a beat. It's positive versus negative, which is not bad. But it's not like, oh my God, we have 3-4% retail sales data. We were expecting negative, 2%. That's like a crazy beat. And that's when I would say, okay, maybe we have too much spending left in the economy and inflation still has a chance to accelerate. I don't think now that CPI is at 2.5%, that inflation is going to accelerate on this. That's why the market's up right now in the pre-markets. Where's the S&P 500? Robinhood's at 2248. S&P 500, 564. We're like 30 cents away from going back to all-time highs. We did hit 565 in the pre-market at one point, which is that all-time high level for the S&P. But the market's up right now because good news is good news, not good news is bad news. Number two is that there is an argument that 50 bips is unlikely now because of the retail sales data, even though the Fed futures are not signaling that, because of the fact that the economy is doing okay, right? People are spending. Now, you could argue the labor market is still cooling off dramatically, and I think that's a reason why the Fed could be nudged to do 50. We're going to find out tomorrow because we just have no clue what's going to happen tomorrow. But the fact is that if consumers are spending, the economy might be to the point where, the Fed thinks, hey, maybe we don't need to do 50 that aggressively, because if people are spending, then, we can chill out a little bit and not worry about dramatic spend. Palantir right here at 3707 in the pre-markets. Overall, retail sales data is very good. We got some news on Microsoft that's up. We got Tesla that's up. SoFi is up. IWM is up. S&P 500 is up. TLT up just a little bit. MicroStrategy up 2.53%. NVIDIA up 1.27%. So maybe the Fed looks at this sales data and says, hey, people are spending so much, we just don't need to cut by 50 bips because that would be too aggressive. But maybe they look at this and say, hey, people are spending. This is the soft landing. Let's not mess this up. Let's do 50. Let's give the market what they want. Start cutting rates aggressively because we're, only have a couple meetings left this year. And let's get to the point where the labor market doesn't fall off a cliff. And 50 basis points might help us get there. And so that's what we're looking at right now. And as a result, we're seeing some momentum here. Now, another piece of news real quick before we transition into Palantir. Some people are saying, oh, well, this will be revised, so it's not that believable. Well, to be honest, the last 3 months were revised. You're not wrong on that. But they were revised to the upside. In June, retail sales were revised upward. In July, they were revised upward. And then in August, we have a preliminary revision as well. So from that perspective, it seems unlikely that we're going to get revised to the downside. Wow, S&P 500 at 565, not bad. But because we got revisions that were to the upside in the past few months, I would imagine that if we do get a revision, it's, it doesn't have to be to the downside. Could it be to the downside? Sure, but the past couple retail sales datas were necessarily good and they were revolved up. Also, retail sales data is less, is harder to manipulate like jobs data, because retail sales is just like companies sending you how much they're spending, how much they're like selling. And so you can aggregate that data and there's like nuances, there's places where it can get mismatched, but at the end of the day, it's like legit gas stations or, retailers saying, hey, we this is how much we spent, this is how much consumers spent, and these are our like receipts. And so it's a bit harder to fake that with jobs data where, companies can say, yeah, we have 10,000 jobs open, and when in reality, they don't have any plans to hire those 10,000 people. So it's a little bit less nuanced in terms of the raw aggregate data. And so I think this is bullish. The market's interpreting it as bullish. For everyone saying the consumer is dead, I'm not disagreeing that the consumer is not struggling, but if they're spending in the month of August way ahead of expectations, that's why we're seeing Palantir right here at 37.15 right now. And the rest of the market, look at SoFi up 1.36%. S&P 500, there you go, 565. The top for the S&P, by the way, for the year is 565. If I'm not wrong, let me make sure. Year to date, 565.16 is the top. That was July 16th. So the top is 565.16. We are currently at 565.15. We are 1 cent away from topping, from getting back to the top, which is very important psychologically because, to get back to those levels. Oh, there we go. We just got above it. 565.18. We just hit a new all-time high for the S&P 500 after going through this crazy August 5th event with this whole yen carry trade. We all learned about what it means to short the yen, and we came back up right here, 565.18, right before the Fed speaks tomorrow. We'll see what happens, but the S&P 500 likes this news. Where's Bitcoin? Is Bitcoin moving on this news? Bitcoin is as well. Yep, 59,400, up 2.35%. Bitcoin is moving on this news as well. Doug says no such thing as a triple top. This mofo is going higher. I would tend to agree. We've seen double tops before. I'm sure plenty of people just know what that looks like from a technical perspective. If you've seen any charts for stocks, you've seen a double top. A triple top is hard to find. I mean, I'm sure it's probably happened, but it's not happened as many times as a double top. And so when you see a triple top, it's more likely than not, hey, we're testing that level and we're breaking that level and we're likely going higher than that level, especially if the aggregate data is showing that, good news is good news at the end of the day. So there you go. S&P 500 at 565. Not bad at all. Okay, let's talk about Palantir. I have so two things. I have a really interesting, unusual economic indicator that I want to talk about. I think you guys are going to love this. Some of you guys are going to hate this, but some of you guys are going to love this. I think the majority of you guys will love this. So we'll talk about that in a bit. But before that, let's get into Palantir because we do have some new Palantir news this morning that broke out that I think is important to get a little deeper into. And then we'll get into some other juicy pieces. Basically, there's an economic indicator that no one's looking at, and I found out about it last night. And I think it's very bullish. I think it's very bullish. Okay, Palantir, 37 in the pre-markets. Nebraska Medicine and Palantir announced pioneering partnership to use AI technology to advance healthcare. Before I get into this deal, it's a multi-million-dollar partnership. It's for AIP. So first of all, we got a multi-year, multi-million-dollar partnership. That's bullish. Second of all, AIP. That's bullish. We just had an entire AIP con. I posted my first customer interview last night. You guys can check that out. I'm posting 2 employee interviews today. I think you guys will enjoy those interviews coming out a little bit later today. But AIP continuing to scale. And then finally, it's a healthcare deal. Healthcare. If you're part of the Palantir ecosystem, part of the Palantir world, if you've been even an investor for a couple months, you know that healthcare is one of the most important elements and verticals to them scaling. And it seems like that is continuing to gain some momentum. So let's read a little bit off this press release. Nebraska Medicine invests in driving innovation at a rate that most peers would deem impossible. Less than 1 year into the partnership, Nebraska Medicine has implemented more than 10 applications of AIP, improving patient throughput, expanding claims reimbursements, and better monitoring patient care. All 3 of these things were talked about with some of the healthcare companies that presented at AIP Con. So some of that stuff might sound similar. It seems like there's like this foundational element of AIP in healthcare, and other healthcare companies are obviously embracing the different use cases that they're getting from AIP. AIP provides Nebraska Medicine safe and secure awareness of their operations with long-term opportunities for transformation across Nebraska's medicines enterprise and more. Palantir and Nebraska Medicine started working in January 2024. So it seems like we have a multi-million-dollar partnership after about 9 months of starting, sharing a mission to rapidly solve critical healthcare problems. The proof: Nebraska Medicine represents Palantir's fastest time to enterprise commitment of any Palantir health system partner to date. That's pretty incredible, dude. I mean, within 9 months, they're like, hey, let's do a deal. In a series of targeted boot camps, again, the booty camps are working. Nebraska Medicine took less than 6 weeks to put a new workflow in production, and as little as 90 minutes to introduce more workflows. I know the valuation is stretched. I'm not going to sit up here and say $37 is cheap. But every time you ask, hey, why, how does Palantir get this $85 billion valuation? Well, it's because they're signing up partners in 9 months after showing them boot camps within 90 minutes to introduce new workflows. I mean, at the end of the day, that's just a different way to sell software. Since partnering with Palantir, Nebraska Medicine has seen a 2,000% increase in discharge lounge utilization, freeing up beds earlier for patients. That means more money for Nebraska Medicine because they can take more patients, and decreasing time from discharge order to patient discharge by 1 hour on average. By the way, patients love that as well because no one wants to stay in a hospital for a long time. So if you can get discharged earlier, patients love to go home earlier than staying at the hospital. Furthermore, Nebraska Medicine sent 1,200 AI-powered appeal letters to payers in less than 3 months, helping the health system more efficiently and effectively respond to claim denials. A couple quotes from the press release. Nebraska Medicine is one of the most innovative healthcare organizations in the country. While many organizations talk about having bold visions, Nebraska Medicine takes actions to translate ideas into real solutions, said Drew Goldstein, co-head of healthcare at Palantir. Their swift commitment to this enterprise partnership highlights our shared focus on rapidly delivering value and driving impactful outcomes to patient healthcare. Because they mentioned a swift commitment, I think it'll be a long time before Nebraska Medicine shakes off Palantir. If you get it, you get it. Michael Ash, MD, Nebraska Medicine, says, our partnership with Palantir is delivering real results for patients and our staff. The technology allows our staff to work smarter and for more of our patients to leave the hospital as soon as they're able to. Most exciting for us, this is just the beginning of the innovations we'll discover together and lead the way for other hospitals. It's bullish, dude. It's bullish. I mean, at the end of the day, it is absolutely bullish. I am not saying that the stock is cheap right now. I definitely don't want to be the guy that says, hey, at 37 it's cheap, and then it falls to 30 and everyone gets upset because I said at 37 it's cheap. I'm being very honest here. It is not cheap at $37. Palantir right here at 37.11. It's not cheap at 35, not cheap at 36. I think it's cheap if you have a 10, 15-year horizon. If you have a 10-month horizon, anything can happen, especially after S&P 500 inclusion. But my point of bringing this up is to say there is a reason the market is betting on Palantir. There is a reason. And because there is a reason the market is betting on Palantir, it's important to understand that reason versus dismiss that reason, which is what I think a lot of people who missed on Palantir, dismiss that reason. At 18, it was expensive. At 25, it was expensive. All this stuff. Yeah. I mean, at all those moments, you could argue, given the growth rate at the time, less than 20%, it was expensive. But if you saw the TAM and you saw the vertical industries they were expanding in, whether it was healthcare, space, defense, they got a $99 million contract the other day. Yesterday, I think they got another $10 million contract, small contract, but another contract from the government. It's just compounding. And because it's compounding, I think that's why it's aggressively beginning to scale. And that's where the market is starting to get a lot more excited in the context of Palantir. The day they are going to be added is going to be Friday. So September 20th, they will be added into the S&P 500. And historically, stocks tend to sell off after the inclusion. They tend to run up into the inclusion. We've seen this many times with a lot of companies in history, most notably Tesla. I think Tesla ran 40% before getting included and then fell 60% after. I don't know if that's going to happen with Palantir. All I'm saying is that they are putting up the execution via numbers and then qualitative aspects, aka CARP, explaining to the world why the ontology is important, why AIP matters. They just had an entire conference with 100 companies showing off AIP. So they're doing what they have to do. I mean, they can't control the stock price at the end of the day. You know, the stock is the stock. The market decides that. But I think they are showing what needs to be shown in order for the company to get a little bit more momentum. Now, one piece of bearish news, which isn't really bearish to me, but I know it'll be interpreted as bearish after I gave you the bullish piece of news that we got this morning with Nebraska Medicine. Alex Karp, CEO of Palantir, sold some shares yesterday, and he did not sell a small amount of shares. Karp cashed out on 4.5 million shares, $160 million worth of stock. 2 points of analysis on this. Number one, he has to pay taxes on a lot of the shares he acquired this year via RSUs. So when people see a big sell like this, some people think, oh, he's only taking profits. Sure, he's taking profits, but he also has to pay taxes on a lot of shares that he was given this year with his stock options and given all the other expenses he has as an individual. Number two, yeah, he's definitely taking some profits right here. This is not a scheduled sale from my understanding. I think his scheduled sales are usually 585,000 shares. That's the number that it tends to be every time it's a scheduled sale. 4.5 million is a pretty aggressive sell-off. I mean, he's like legit taking profits right here. So one piece of news I want to bring to everybody because you know, people should know what the insiders are doing. If he's selling $160 million worth of stock and you're buying it at 37, it's just one thing to remember. Now, what is bullish about this, even though, yeah, Karp sold 4.5 million shares. By the way, Karp still has 65 million shares yet. So still a small stake in his overall position, is that this happened yesterday and Palantir closed at a 52-week high yesterday. This happened yesterday and Palantir is currently up at $37 right now. As Michael Schaefer says, he sells 160 million and it doesn't stop the Palantir rocket. So not only does Karp deserve it, not only if I was an insider holding these shares with a 2-cent average from 2003, would I be like, hey, at $37, if the market's willing to give me the price, I think he sold at like 35.84. That was his average. Yeah, I'm going to take that. I mean, like, there's no one in the chat that can tell me they're not going to take some chips off the table after working at a company for 20 years and really being the reason why the stock is even getting to this point. I mean, make no mistake about it. If this was Karp not leading the ship, Palantir would not be at $37. You need a leader that can inspire, especially because we know $37 is obviously a bit overvalued, but people are buying into Karp's vision. They're not buying into John Smith's vision. They're buying into Alex Karp's vision. So at the end of the day, he absolutely deserves it. I have no problem with the sale. But the fact that the market is like, hey, sell 4.5 million shares, we don't give a fuck, we're moving higher, is pretty incredible. And it speaks to the liquidity that exists inside of this company, whether it's from institutions that are loading up on it before the S&P 500 or retail that's coming in right now and having some FOMO, which I imagine there's some FOMO that's going on right now. The market's able to withstand those 4.5 million shares. So one thing to think about when we think of Palantir, but yeah, we're up right now here at $37. And most likely this is because of the retail sales data. For those that are just joining, retail sales data came in better than expected at 0.1% positive. The market was expecting 0.2% negative. So once again, for the second month in a row, retail sales data has shocked to the upside. And the U.S. consumer continues to be resilient and spend. The last 2 months were revised positively. Maybe this can be revised negatively. We'll see next month, but I would imagine that retail sales data, again, it's just a little harder to manipulate versus jobs data. So if that data is coming in good, even if we fall, 0.2 percentage points from here, we would still be beating expectations at negative 0.1%. So I think that's why the market is bullish. The market didn't trust the BLS job revisions, which is why the market went down when that came out on, well, not the BLS job provisions. When the 142 versus 160 number came out on September 6th, that was supposed to be like the most important number. Market kind of tanked. That was actually one of the worst Fridays, we had in 2024 because they just didn't trust those numbers. I think the market kind of got over that because they got a lot of new news over the past couple of weeks, which really isn't new, but it was basically Oracle and Jensen Huang saying, hey, AI is real, like growth is going to happen. That calmed down the markets. And then number two, I think this retail sales data is less being interpreted as like fake data because obviously if it was not interpreted as really good data, we would see what happened on September 6th in terms of the market not having a reaction. The market is having a very big reaction right now as we're seeing the market go higher. based on this data, they believe that the consumer is spending. SoFi right here up 1.55%. S&P 500, wow, new 52-week high for the S&P 500, 565. I do not think this is the time to take a victory lap. And I'm definitely not taking a victory lap, but it is encouraging to see that the market is wanting to go higher. Now we have, ironically, these are supposed to be the worst 2 weeks of the year. So this could be a head fake. And then over the next 2 weeks, we see a nice little pullback that could happen. And also we're going into an election, and an election is not really great for volatility. We still have to deal with October. So there's a lot of catalysts that are left to get things to go to the downside. But at least on today, based on the retail sales data, market is pretty excited, and we're starting to see some more momentum. Atit says, hey, is there a possibility that there is no rate cut? I think there is a 0% chance we have no rate cut. I am 50-50 on 25 or 50. I know the market right now is saying, hey, it's 70-30. We're going to get 50. I really don't know, dude. Tomorrow at 2 p.m. is going to be one of the most crazy days in the stock market this year, because if you look at any of the Bank of America data that came out this morning about the perception of the possibilities of what the Fed is going to do, it is at an all-time high in terms of the unpredictability of what the Fed is going to do. For the past 14 meetings, they've just paused rates, and they said we're going to be data dependent. This is the first time they will have a new paradigm when it comes to monetary policy. They're going to be focusing on maximum employment, not just price stability. And they're officially going to say it is time to start cutting rates. That process is going to start. The question is going to be, how do they start that process? My gut tells me 25, but I think there's a shot they could do 50, because you've got all these former Fed members coming out saying, hey, we should do 50. Maybe Jay Powell listens to them. Maybe he doesn't. But we're definitely getting a cut tomorrow. And if we don't get a cut, everything's going to shit. So if we don't get a cut, the market's going to shit. We're going to get a cut. The question is going to be 25 or 50. And we'll see. We'll see what ends up happening. There you go. That's the news we have on Palantir and retail sales data. Now, will Palantir hold 37? Look, I kind of think there's a shot we hold 37, simply because yesterday we were at 36.94. I think we topped out yesterday. We really wanted 37 yesterday. It didn't happen. The highest previous close for Palantir was January 27th, 2021 at $39. We peaked at 45 that day. If you look at the charts will say we never got to 45 or 39. A lot of those charts don't really take into account that day because it was so quick when we got to those levels. But we did indeed close. If you look at the historical data on Palantir closes, I checked last night, $39, January 27th, 2021. So we are closing at new 52-week highs, 3-year highs, but we have not closed at an all-time high yet. $39 is the number you're looking at for an all-time high close. Look, the market looked like it wanted 37 yesterday. We got the right data today. We'll see what happens, but the fact that we're at 37.13 in the pre-markets makes sense, at least based on the momentum we saw yesterday. And we'll see what happens. Now, again, let me say this again, because I really, really, really need to make this point very clear. I am not saying Palantir is cheap right now. I've learned a little bit over the past couple of years. I understand paying $81 billion for a company doing less than $500 million in profits, with 70% of those profits coming from treasury bills, is a bit up there. I get it. My job is to just help explain why this is happening. And the easy explanation is dumb retail. You could have that explanation. I'm not going to say that's the worst explanation in the world. However, given the fact that I've covered the company for 4 years, given the fact that I was just at the company's conference, I think there is a deeper moat to this company. Bank of America, I still have my Mariana $50 price target video that's coming out tomorrow. I'll go deeper into her price target. If you read her report, it's on my Twitter. Twitter's in the description. You can check it out. The street is starting to realize what retail has realized for a while. That doesn't mean the stock can't be overvalued or stretched, but that does at least offer some explanation for why people are buying this company. And maybe they don't care if the stock falls 30% from here, because they'll just buy that dip. It is it's just becoming one of those stories where people are buying in. They are getting a strong amount of conviction. And if that conviction holds stable, and if the company can execute against that conviction, which basically means reaccelerating revenue growth to 30% and hopefully 40, 50% in the next couple of years, because we really need those NVIDIA type numbers to justify the multiples we're getting, then people are going to buy the stock, and it's going to be overvalued forever. So I just think it's very important to understand that. But I don't think, you should take out a second mortgage right now to load up on Palantir at 37, because you're buying a stock that's up more than 100% year to date, and short-term volatility is very real, and that could happen over the next few months. So those are my thoughts on it. probably a bit expensive right now, but there's a reason it's expensive. And I think that's what the bears forget about. The bears say it's expensive because of dumb retail. It's like, dude, it's not just retail. There is an institutional focus on this company that is starting to become more exciting. They're putting up the numbers, they're putting up the results, and people are caring about it. And I don't think it's just retail investors. I mean, the retail investors that really cared about it like basically $18 ago. That's when retail investors were really getting excited. I'm not saying new retail is not coming in right now, but I'm saying at that moment was when it was literally all retail and there was no institutions. Now, after S&P 500, after like 17 different price target upgrades from Jefferies, Wedbush, Citigroup, Bank of America, etc., now you've got the street getting a bit more excited. And so I think there's more people realizing what the Palantir story is at the end of the day. Okay. Let's move on to a new economic indicator that I found out about last night, which maybe, it's so nice we got good retail sales data because this retail sales data actually backs up the argument that I was going to make today. That proves that we are so back and that the American consumer is really strong. So I did not find this stock on my own. I got a call last night. Got a call at about 10:30 p.m. I'm not going to say who gave me the call. You guys can pontificate who gave me the call, but I got a call last night. And guy calls me and he says, hey, I need you to look at this. And I say, why do I need to look at this right now? It's 10 p.m. I'm about to go to sleep. I'm tired, had a long day, almost got arrested last night. We'll talk about that story in a bit. That was hilarious. The fact that it happened on the stream, if you were there, you were there. And he said, I need you to check this out. And I said, okay, cool. I'll check it out. As soon as I checked it out, I started to get a little bit more excited about what he had to show me. And I started thinking, hey, maybe the US consumer is back and they're better than they've ever been. Folks, I am talking, and I don't have a position in this company. I have no position in this company, but I'm using them as a proxy to understand what's going on. You guys are saying, Steve, I don't really know who it is, but you can pontificate whoever you want to pontificate for. I am looking at ticker symbol RIC. Let me know in the chat if anyone knows ticker symbol RIC, R-I-C-K. Ticker symbol RIC, RCI Hospitality Holdings, on September 3rd, so this was actually 2 weeks ago, announced they increased their quarterly cash dividend by 16.7%. Now, why is that important? Well, whenever a company increases their dividend to some level outside of them, like being desperate to get employees to say or shareholders to say, if it's corresponding with actual accelerating growth, which this company is showing, and I'll show in a second, it means that things are bullish. It means they have more disposable income and they're willing to give some of that money back to their shareholders. Now, you may be asking, what is RCI Hospitality? Strip clubs are back, and they are back in action, and people are coming to the strip clubs and they are spending their good old cash. Folks, it seems like the US consumer is resilient because one of the largest nightclub and strip club owners, well, they call them adult nightclubs, whatever. One of the largest nightclub owners in the United States is officially back and they are accelerating growth. Third quarter revenue, same store sales increase. This is the first time since second quarter of 2023. They continue to open up new locations. Bombshell revenues improved for the second quarter in a row. Bombshells is basically their version of Hooters, which if you've been to Hooters, you know kind of the vibe that exists at Hooters. And they initiated a $25 million share buyback authorization. Again, buying back shares, very bullish. It means you have more money. It means you have growth. It means we have free cash flow to be able to buy back that money. And they bought back 800,000 shares, 400,000 shares at an average price of $46.75 as per the year of 2025. So total revenues, $76 million in third quarter of 2024 started to reaccelerate. If you look at their nightclub segment, it is at the highest level at $62.8 million since third quarter of 2023. Their operating margins are also starting to get back to some of their highest levels since third quarter of 2023. And their revenues are up 400,000 from 1.7% SSS growth and 2 new reformatted clubs, basically opening up more clubs across the entire country. I believe they own about 70 different locations. Scarlett's Nightclub is one of those companies. Scarlett's Cabaret is one of the companies that they own, and that for those that have been to that establishment, that this is one of the locations that they own, and it seems like things are going well. So ultimately, at the end of the day, the reason I'm bringing this up is because if you've got people not just spending money on OnlyFans, by the way, I don't know if you guys saw the stat, but OnlyFans creators this year have made $6.5 billion. NBA players have made $5.3 billion. OnlyFans girls essentially have made about $1 billion more than National Basketball Association players, which is insane. But you don't just have people spending money for OnlyFans. Now you have people actually going back to the clubs. And the fact that they're increasing their dividend, the fact that this quarter was the first quarter of accelerating growth in over a year is showing to me that people are ready to spend. In fact, I think I need to do some due diligence on this company. And, I think maybe I need to visit some of these establishments to fully understand the investment thesis. If they're having an investor conference, I would love to be invited. So if anyone works at Rick, let me know. Because it would definitely be cool to check out the establishments and really understand the vibe of these industries and how they're doing and why people are continuing to come back. So in all seriousness, I know this is not the best economic indicator, but it is an unusual economic indicator that's basically showing people are coming back. The U.S. consumer spending. If men have disposable income that they're ready to spend at these nightclubs for alcohol, for whatever things they may be engaging in, that at least shows us that the U.S. consumer is not dead. Yesterday we talked about Broadway results or Broadway shows as like an economic indicator. Some people were like, oh, that's stupid. That's not the best economic indicator. My perspective here is if you're spending $125 for the cheapest ticket you can get at a Broadway show, most of them are usually closer to like $150 unless you get like a really good deal at like $75. But you're paying a hefty premium to go to a Broadway show. That means you have disposable income. And if people stop going to Broadway shows based on the index we looked at last night, people are going, to Broadway shows, then that's a bigger sign of things that are hurting. Not the best indicator, but one indicator. Same thing with strip clubs. Not the best indicator, but definitely a indicator. And if it is a indicator, especially an indicator that I think a lot of people haven't heard of, especially, I didn't hear about this indicator for a while. I learned about it last night because a friend told me about it. Then I think that is at least something to look at a deeper level. Third quarter 2023 is when they peaked at $77 million. Third quarter 2024, they are basically right back to that $77 million. I'm not saying this is a good investment. I'm not investing in this stock. Nothing like that. All I'm saying is that if they are getting back to a level where they are re-accelerating revenue the same that they did at the midpoint of 2023 when we were raising rates dramatically, then if we start lowering rates, what does that mean if they're already starting to re-accelerate based on the health of the consumer before we initiate in the rate cutting cycle? So there you go. And that's like that's like a lot of these comments are great. That's like we're seeing a little bit of momentum. At the end of the day, again, at this point, because we are so confused on what's going on in the economy from a variety of sectors, I think we're trying to find any piece of data that can give us a little bit more clarity on like, hey, what's happening, what's going on. And if we have to look at nightclubs to give us a little bit more, data on just like how this is playing out, I don't think it's the worst thing in the world to try to get some of that core info. But retail sales going up today is very congruent with the third quarter earnings from Rick. By the way, I love that ticker symbol, Rick. Rick sounds like a guy who would be, using RCI hospitality products. So I love that ticker symbol. But it seems to be congruent with what we got with the retail sales data today, and makes a lot of sense as well. Let's get another update on retail sales data. We got the market open in 9 minutes. Palantir right here, $37.02 in the pre-markets. Let's get this update, and then we'll keep going from there.
They're getting before they decide what to do. Stronger than expected headline, revisions upwards to retail sales from last time. Does that factor into what the Fed's going to be thinking today?
Yeah, I agree with almost everything Rick said about it. It's a solid report. And even more so, Becky, Rick usually gives the control group. I think I can give you that. I think I saw that up 0.3. And the key there is that's the number that feeds into the GDP calculations. Where were we before? We were thinking it was a 3% quarter. So this really gets to the whole Fed debate right now, which is, do you really need to cut 50 basis points and show that you're really concerned about the economy when you're coming along here at a 3% GDP rate may be even higher once they plug in the revisions as well. So, and the consumer's not giving it up. My take on this number, Becky, is it's a bit all over the place. We do have a little sort of running problem with seasonally adjusting for, among other things, Prime Day in July. August is a little squirrely. So you have a bit of up and down with a bunch of the data here. Let me just go back here to the actual number. And what you find is, for example, electronics and appliances were down 1.1%. Hang on. Yes, right. Down 1.1%. That could be a bounce back or a bounce down from July.
So at the end of the day, a lot of the data seems to be consistent with what they're looking at right here. And although we had some big declines, we also had some big increases. Again, for those that are just joining, August retail sales, the reason the stock market is up again right now in the pre-markets, we're at all-time highs on the S&P 500, is because of this number right here. I think if we came in within expectations, the market would not be up. And if we came in worse than expectations, the market would be down right now. Because what's the biggest threat to Q3 earnings? The consumer. If Q3 earnings are bad, aka guidance, not just the numbers, right, but like the guidance. If Shopify says, hey, in Q4, we don't think we're going to grow as much as we did in Q3, then the market's going to be like, why not? And then Toby Luke, the CEO of Shopify, is going to be like, well, people might not buy that much in Q4. And they're going to be like, well, why people aren't buying in Q4, right? And like he'll have to admit, yeah, the consumer is a little bit stretched right now. And as much as he's going to hate to admit it, he would have to say it, which would mess up their forward earnings. And it's really not going to matter how they did in Q3 because of the guidance. Now, based on what Shopify said, particularly at the Goldman conference, they said the consumer is spending really, really nicely. Same thing. MasterCard said the same. So you're seeing a lot of these retail companies say, hey, the consumer's okay. And you got Anthony Noto from SoFi warning that they're okay right now, but if we don't cut aggressively, they're going to get bad. Which means if we had retail sales data that missed expectations today, you would basically have the narrative that says, hey, we got to cut aggressively, but not because inflation's coming down, which is like the bullish reason to cut. It's because the U.S. consumer is struggling and we need to re-stimulate the economy. That's not the narrative. That's not the narrative. The narrative is people like Rick are going to nightclubs. And that's why RCI Hospitality is reaccelerating earnings. And that's why retail sales data is up right now. So we're seeing momentum with retail sales. The question is simply going to be how the market interprets 25 or 50 when it comes out tomorrow. Palantir at $37 right now. Robinhood, $22.51. You got Tesla up about 1%. IWM, small caps, getting back their momentum. 219 up 1% on the day. SoFi right here up 1.6% at 819. MicroStrategy up 3% because Bitcoin's up. Nvidia right here up 1.18%. Intel. All right, so let's talk a little bit about Intel. We got 5 minutes until the market open. Ironically, yesterday on this very show, I said, hey, why is the United States not pumping in $1 trillion to build up Intel? Now, metaphorically, I was using Intel for my example that I was doing, but realistically, what I meant is we need to invest in chips because if you believe China's invading Taiwan, then TSMC is done. If you don't believe that, then this doesn't matter. If you do believe that and you take it seriously, then hey, we need to have our own chips. Intel comes out yesterday after hours. The stock was up 6% during the day. All the semiconductor stocks were down. Kind of looked odd. And then you realize why it was up because there was some news that was happening after hours. And of course, someone knew that news would come out. And then it went up another 10%. Right now it's up 5%. So it gave back 5% of the gains at 21.92 right here. But it got a bunch of price target upgrades because yesterday they announced a collaboration with Amazon, AWS, to do what? To build chips. And as a result of that, you're seeing the market say, okay, hold on. We thought Intel was dead. But now they're restructuring the business. They might be making the foundry business or the fabs part of the business like an independent entity, which might happen, might not happen. And now Amazon wants to work with them to build custom chips in the United States, not overseas. Kind of bullish. JP Morgan said today, we view Intel's recent announcements as providing better clarification on previously disclosed actions rather than representing incremental changes. For the foundry business, Intel remains on track for a meaningful ramp up from external foundry customers by 2027, although the pipeline is building. The expanded strategic collaboration with AWS adds some incremental confidence in its growing customer pipeline. Despite this, we maintain an underweight rating on Intel with a $26 price target. The fact that they're even giving them a $26 price target to me is kind of bullish. I mean, if you bought Intel at $18.19, I'm sure you would be very happy with $26. $6. Now, Bank of America has a $21 price target. They also have an underperform. And they said Intel's recent announcements, including AWS on a custom AI fabric chip collaboration, along with $3 billion in U.S. government chips funding, which happened on Friday last week, raised more questions than answers. The creation of Intel Foundry as an independent subsidiary and pauses in certain investments in Poland and Germany also lack clarity. There was no new financial model provided, and it's unclear if the Foundry move is anything beyond a reporting change. So Bank of America a little bit more bearish in the news. Additionally, there were no updates on the critical manufacturing node. While the AWS collaboration may seem notable, Intel has long been supplying AWS with CPUs, so the customization isn't necessarily new. It will face strong competition from Broadcom and others in 2026. So you've got one bullish perspective, one bearish perspective, but I think the key sort of argument here is that we do have this at least energy of chips being made in the United States, whether it's Intel or whether it's going to be other companies. And that's obviously very important if you believe that there's going to be more geopolitical instability over the next few years. Okay, cool. So that's what we have right now. Amazon partnership does more for Intel than free government money. I would agree with that. I mean, look, at the end of the day, if the government gave them money with no plan, then the Amazon partnership obviously does a lot more. In general, we'll see how much the government chooses to spend over the next couple of years on chips, if they care about chips and care about having manufacturing in the United States. But the Amazon partnership is definitely bullish. Now, I don't have an Intel position. I didn't buy it 1819. I know a bunch of you did in the chat. So if you did, I mean, this is definitely in the right direction. It's not in the wrong direction. And if Intel retraces back to 30 over the next year, you bought it 17, 18. I mean, it's not the worst kind of recovery story, but there is a lot of execution that has to happen with management. And that's what we're going to need to see over the next few months. Microsoft, some news on them. We've got the market open in 50 seconds. They announced a $60 billion buyback program. The stock's up 2% right now, and they announced a 10% increase in their dividend. I kind of think this is bullish. I'm also thinking, hey, are they going to miss on their Azure numbers and they're trying to just soften the blow for investors when they have a little bit of a miss? But also, I looked at some charts, and historically around this time in September, they've always initiated a dividend increase and an increase in the buyback. So maybe it's not really that bearish. It's just on track for what they usually do. So the stock's up right now 2%. The street likes it. They don't think it's bearish. They think, hey, we get more buybacks, which is great. We get more yield in terms of the dividend, which is great. More return to shareholders. So at the end of the day, street is bullish. Microsoft right here at 440. All-time high was 460. Went to 395. Now at 440 as we open up the markets. Tuesday, September 17th, 9:30 a.m. The stock market is now open. Thursday will be the first day after the FOMC meeting, so we'll see what happens with the Fed tomorrow, but that will also be a big day. Wake your ass up, 36.68 on Palantir, so you got a nice sell-off right there at 37 on Palantir. Definitely got the red candle right there. 37 was not able to maintain its momentum. Now, we've seen this many times with Palantir. It hits a new all-time high 52-week high in the pre-markets, sells off by 1 to 2%, and then makes a little bit of a U-turn. So we'll see if that happens over the next 30 minutes to an hour. It could even happen in the next 10 minutes. Volume right here, 4.5 million. Volume yesterday was at 3 million. So you've got 1.5 million shares being traded in the first 30 seconds of the market opening. We'll see what happens with Palantir. 36.70 on the day for Palantir. Robinhood opens up 1.7%, 22.60. Not bad. Robinhood is now 57% from the lows on August 5th. Getting some good momentum. I think earnings are going to be strong, and I think that their overall growth should be in the right direction. So Robinhood right here at 22.57. Microsoft opens up 1.75% on the dividend yield increase and the buyback news. CrowdStrike at 2.69. Adobe at 5.24, getting a little bit of momentum after falling 10% on bad Q4 guidance. Wow, look at small caps. They're up 1% on the day. S&P 500, new all-time high on the S&P 500. Wow. I'm pretty sure this is the all-time high. If we go to year to date, at least what I'm seeing right now, yeah, all-time high was 565.16 is what I'm seeing on July 16th. So 565.22, basically at all-time highs right here on the S&P 500. Yeah, 52-week high today, 565.39. There you go. 565.39. Right now we're at 565.2. We went through hell on August 5th, and if you bought the dip, so far you have been rewarded. If you bought Robinhood under 15, if you bought Palantir at $20, you have been rewarded. Nvidia at 90, lots of stocks got hit that day. We'll see if we can end the year right. And I think based on the economic data we got today with retail sales data, the Fed cutting We should be able to end the year right, but so far, buying the dip has been a strong strategy this year. MicroStrategy up 2%, NVIDIA up 1.25%, Intel up 4% on the day, Rocket Lab, wow, 742 up 0.5%. Amazon trying to make its way back to 190 on Amazon, 188.51 right now. Where's Tesla? We got that 10/10 event coming up in less than a month. 233 up 3% on the day. Tesla getting some momentum. We saw 235 on September 5th before we got all of it taken away on September 6th with jobs data that wasn't the best. But 233, not too bad on Tesla, up 2.9%. I think the jobs data being bad and the retail sales data being good is basically the market saying, hey, we think the consumer's all right, even though they're not perfect, because perfect would be better jobs data, but retail sales data is enough to say they're all right. And earnings growth is the tiebreaker between jobs and retail sales that determines why the market is buying equities right now. And I don't think, people are thinking, hey, like this is the time to sell or take profits right now because we see this upcoming recession, because the data is just not there to fully prove that. Now, there's some parts of the data that, do say, hey, it could be likely we have a recession, but retail sales data was not it. Also on jobs, at the end of the day, we're hiring people. We're not net firing people. Maybe we're not hiring as many people, which is not good. I get it. But we're definitely not firing people, which is what you tend to see in a recession. Every month, you're like having massive layoffs. And so I think the jury's still out. I don't want to say the bulls have officially won. I don't want to say the market's officially in a bull market yet. I still think we need to get through the election, but at least the market is deciding that Q3 earnings is enough to continue to keep them bullish. Where is Amazon right here? Amazon right here at 187. Let's go to the Max 7. If Apple's up today, that would be interesting. Apple is down. All right, so I expected Apple to be down because for those that missed it, the iPhone sales yesterday were horrendous in terms of the demand. We got a new update today that in China, Apple's iPhone 16 is already setting it at a discount. Pinduoduo is offering the iPhone 16 with a 10% discount, and the 128 gigabyte model is discounted by 11%. And then a couple of other local retailers in China are offering a 4% discount on the iPhone 16 Pro Max. You don't want to see discounts happening already. It means that there's not enough incentive for Chinese consumers to buy this stuff. We know Huawei introduced a 3-way folding phone. I don't know why people are excited about that, but apparently people are excited about that. And that already got 3.2 million pre-orders the day that it launched. So it makes sense that the market's just not rewarding Apple right now. If the upgrade cycle doesn't happen anytime soon, market maybe be reallocating that capital in different places. Meta right here is up 1%, Google up 0.5%, Amazon up 1.4%, NVIDIA up 1%, Tesla up 2.3%. Tesla the winner out of the Max 7 right now. Microsoft is up 1.6% on the dividend news for today. David says unemployment going up means Fed will cut rates. Retail sales staying strong means lower rates without consumer recession. Bullish for stocks. Yeah, I agree. I relatively agree with that at the end of the day. The question is going to be, will the unemployment rate that is going lower, but we all kind of know it's going higher, is that going to eventually lead to the consumer not being able to put up the retail sales numbers that they put up over the past 3 months? And again, maybe that happens in September, but in August, people are buying. People are buying in August, and that retail sales data was enough for the market to feel that the consumer is still healthy. All the semis are up besides TSM, which is barely flat, and then SMCI, which is barely flat. The rest of the semis are catching a nice bid. ASML, Broadcom, Qualcomm, Dell, Micron, Lam Research, ARM, AMD, and NVIDIA kind of leading the way. NVIDIA getting a bit of a red candle. It was up 2%. Now it's up about 0.5%, but still up and green on the day right now. Did you watch Carp on Real Time with Bill Maher? Yes, I watched it. I thought it was a great interview. For those that haven't watched it, it's on, if you just scroll on my Twitter, it's a little bit down from Sunday. I posted it. I thought it was a great 11-minute interview. Bitcoin right here going down just a little bit, but at 59,000. And I thought it introduced Carp to a new audience. And because it introduced Carp to a new audience, I think ultimately that's more bullish for Palantir. I think the media generation, the media attention is continuing to generate more and more of a compounding effect. And that's also why we're seeing the stock trade at some of these levels. So we got a red candle right here on Palantir at 36.45. Again, I feel very greedy for even saying, oh, Palantir's red on the day. We're not at 37 because, that's I feel like that's asking for a lot. Even if Palantir were to fall to $33, I know people would hate it, but you've got to remember the context. Palantir is up more than, I think Palantir is challenging NVIDIA in terms of how much it's up year to date. So any negative moves to the downside is probably expected after this much of a run. And it's kind of just what you deal with, and we'll see kind of where it settles out. But it is normalizing the 30s. Very, there was a big debate over the past couple of weeks of like, hey, can we normalize this $30 range? Now that we're so deep into the 30s, even if we fall back 20, 30%, we're still going to be in that low 30s, 31, 32 range, which I don't, that's not the worst thing in the world. That's just not the, the worst thing in the world if we get to those levels. So we'll see. But falling into the low 30s isn't the worst thing, but the partnerships and deals that we're getting are, continuously creating some more reacceleration. We also have to see when there's buyer fatigue, because we saw this with NVIDIA, and unfortunately we saw this right before their earnings. There was just so much fatigue when NVIDIA was at $125. And then they had earnings, they crushed guidance, but buyers were just tired. At some point, buyers do get tired. And you have to ask yourself, when that tiring happens, and maybe that's a great dip opportunity, but we'll see if that ends up happening with Palantir. Palantir is one of the only red stocks on the day. So you've got some red across the market. The majority is green, but Palantir is red. Obviously, it's up a lot already for the week. Rocket Lab 732 just went red. Oracle 167, that's down 1.4%. That's up now 50% year to date. Larry Ellison is now the second richest person in the world, as per this stock going up. So you definitely got some momentum here with Oracle as well. Crazy to think that $35 is a dip now for Palantir. Yeah, I agree. That's kind of crazy, right? Doug says, I'd buy the triple flip phone in a heartbeat. You guys don't know foldable phones are larger fonts, better video viewing, and much larger volume for battery space. It's a compelling argument. I will never buy a foldable phone. I'm just like, I'm not doing that. That's not, I tried it out at a store once, dude. I was like, what am I doing, dude? What a foldable phone? Like it's, but I respect it for those that have it. I don't know. It's a little bit too much to deal with, but maybe after using it for a couple of days, maybe, that large screen would do something for me. I also just love the iPhone, dude. At the end of the day, I'm an Apple guy, and getting used to the Android would be a little tough, but you never know. Maybe Apple comes out with a I mean, I think Apple should have done a foldable phone if they were going to innovate on the phone versus like this whole Apple Intelligence stuff that no one cares about. Either give me a better battery or do something different like a foldable phone. Even if it's like not exciting, at least it would be different. But the AI features so far are just not that exciting, which is why Apple is down right now, because they are not getting the demand momentum that they need. 215 on Apple, down another 0.5% on the day. If you want a tablet and a phone, then yes, Huawei folding phone is nice. Yeah, that's the other thing, dude. I bought this iPad and I barely use my iPad. So I thought I would be a big user of a tablet, but I'm not. But for others that are, there's probably use case with a tablet and a phone together. It's $3,000. Holy crap. Okay, that's a lot to pay. That's a lot to pay for a phone. That's a lot. $3,000 is a lot, but I guess if it makes you more productive, then there's an argument there. Robinhood at 2250, Microsoft at 438, CrowdStrike at 271. We're seeing some momentum there. Adobe at 523, IWM at 219. SoFi as well, showing some nice momentum. I mean, at 818. SoFi January 2027 $15 leaps are out. I don't think it's crazy to say SoFi would be 15 by January 2027. However, maybe right now is not the best time to engage in it. The premiums are a bit higher right now. If SoFi has a little bit of volatility, then those premiums will be a little bit lower. But those leaps are out right now. Given 15 is the highest strike, I was surprised because I think SoFi should get to 15 by January 2027, even with the whole debate on are they a bank, are they a tech company, whatever. But I guess we'll find out, what SoFi ultimately is valued as. But those leaps are out right now. Berkshire is up on the day. QQQ, the NASDAQ is up 0.5% right now. TSM as well, up 0.4%. Celsius up 2.14% on the day as well. Huawei is banned in the US. They are banned in the US. China was not happy when we did that, but we did do that a while ago. Palantir right here, 36.38. So we are green for the day. We got a nice red candle right there from 37.18, but we are still green for the day. What's the offering news on TLRY? I don't know if there's any offering news on TLRY. I would imagine if there is, yeah, they might have done a shelf offering. Stock's up about 1%. I don't cover the stock too much. I believe this is the weed company, if I'm not wrong. Interesting that they're green on an offering. Usually stocks go down on an offering, but they seem to be green. Affirm did have some good piece of news this morning. Affirm's up about 1%. Affirm's up 80% or like 60% in the past couple months. Apple Pay has basically said, hey, we give up. Affirm is the one that's going to win when it comes to buy now, pay later. So Apple and Affirm announced a new partnership today. Starting today, Apple Pay users in the US can request to pay overtime with Affirm, splitting eligible purchases into bi-weekly or monthly payments for as low as 0% APR. Now, this is really bullish for Affirm because basically it says, hey, we are taking a lot of the trillions of dollars of volume that is going through Apple Pay. I know a lot of people use Apple Pay. It's just one of the easiest things to use. And we are getting some of that momentum via this buy now, pay later partnership. It's also Apple acknowledging that they tried to do buy now, pay later on their own, and it didn't work. And because it didn't work, that is why Apple is, defaulting to Affirm at the end of the day as one of the better options. But it goes to show that Affirm is executing really well. Now, when we get rate cuts, Affirm is going to be able to affirm more people onto their list for lending. They talked about that in the earnings call last week. And that's also just really bullish at the end of the day for them. So you got some companies, like Ally Financial saying the consumer is in a horrible situation. And then you got Affirm saying the consumer is great. And we're going to affirm more people pretty soon and approve them for these loans. So again, that's why I think the jury's still out on the consumer, but at least the retail sales data today is showing the consumer is not in the worst position right now. After S&P inclusion, Tesla went up 50% in a month and 100% in 11 months. Same possible for Palantir. So the one thing to remember when that happened, Tesla got into the S&P 500 December 2020. December 2020, interest rates were zero. It went up 100% to $414, which is when it was valued at $1 trillion in October 2021. October 2021 was literally the peak for Tesla. Not literally the peak for the market, but that October, November 2021 time, if you guys remember, it was frothy. The NASDAQ was at 16,000. Like, it was frothy. Meta was worth $1 trillion and they were burning $70 billion a year on the metaverse. Like, it was frothy. So I think, unfortunately, Tesla went up, going up 100% after getting into the S&P 500. One of the reasons why Tesla had such a nasty decline is because it went up in a literal zero interest rate environment. And so the growth was there, but the growth wasn't taking it up 20x. It was the fact that interest rates were zero and the market needed a yield, and Tesla was one of the most exciting companies in the world to invest in. Then reality came in. You had interest rates go up to 5%, and people weren't buying Teslas as much because it costs a lot to pay for the interest rate on a Tesla, to finance a Tesla. And so Tesla started declining. So I don't know if that happens with Palantir because interest rates are not going to go back to zero, right? And so is it possible Palantir goes up 100% in the next 12 months? Sure, but it's already up 100% this year. That it might be a little tougher for them to do it unless they accelerate growth. If they accelerate growth to 40, 50% in 2025, I think it's very possible because the street's going to eat that up. I mean, people are going to go crazy if the world premier AI SaaS company is actually growing like a world premier AI SaaS company. I think evaluation is going to be thrown out the window if they end up growing that much. It's already getting kind of thrown out the window, and they're not growing at the levels that you would expect. So we'll see what happens. But the fact that interest rates are higher, I think, is going to have a little bit of a caveat in Palantir's momentum. Elon then also bought Twitter, which, definitely some people were not happy about when that happened. What do you think of HIMS? I like HIMS. I don't have a position. I think TJ and I already closed out our puts. He'll be on Friday to talk about our public portfolio. But we sold puts at 14. Stock is at 1646. I think we closed the puts up 72% last Friday. So we made a nice bit of premium there. If we had got assigned, our adjusted cost basis would be 1350. So yeah, I mean, like I like HIMS. I think the growth is phenomenal. I think GLP-1 is crowded, but there is room for many players. Eli Lilly is going to be the big winner. I think HIMS can be a smaller player, even if they're not as big, because the TAM is close to $200 billion. People like Ozempic a lot. And so I like HIMS. And HIMS was growing before the Ozempic angle even got introduced. I mean, they were just growing on their core business 80% year over year. They're now GAAP profitable. So I like it. I don't think it's a horrible company. It is up a lot year to date. So I would sell puts to scale into the position. But definitely a fan of the execution that they're having right now at HIMS as well. Rick is him. That's correct. Rick is absolutely HIMS. Okay, what else do we have? Apple's really red. Is Apple still taking a beating? It's so sad to see Apple take a beating, but it's recovering a little bit right here, but it kind of was predictable, dude, after they announced that Vision Pro, or not the Vision Pro, they announced the iPhone 16 and the event just didn't have anything new to it, Like, I remember watching it and I was just like, man, there's just thinking in my head, I'm like, why would people upgrade, And sometimes it's as simple as if people aren't going to upgrade, they're not going to have the numbers. Now, I don't want to write Apple off because I think people are still projecting an upgrade cycle. But if that doesn't happen, S&P 52-week high, 565.38. It's one of those things where I don't know how the street's going to reward them or deal with them. Also, here's the other thing. I don't think we need Apple for the market to go up. Like, we need Apple as an AI thematic in order for the market to remain bullish on like the consumer applications of AI. But if Apple falls 20%, I think that money easily goes into Tesla. That money easily goes into NVIDIA. That money easily goes into Google. I mean, like, I don't think that money has to leave and stay on the sidelines if it leaves Apple. or if Apple falling is indicative of the broader market having some problems. You could argue that consumers not spending on the iPhone is bad for consumer spending, but in reality, consumers aren't spending on the iPhone because there's no reason to upgrade to the iPhone. So I think people that try to make a correlation between consumer spending and iPhone sales, there's an argument there, but there's also an argument that there's just like not a compelling reason. And so that could be one argument, you know, for why Apple is not as indicative of the consumer. Here is Bank of America on their note yesterday. We have the Fed meeting tomorrow. So if you look at this, this is the most uncertain FOMC meeting on record. This is the most uncertain FOMC meeting on record. Most people are thinking, hey, we're going to get some cuts. We don't know if it's 25 or 50. And because we don't know if it's 25 or 50, the market is kind of struggling to deal with that. The market's up right now. It seems like the volatility is going to the upside. But tomorrow, when we get that result at 2 p.m., we're going to see what actually happens. Now, Nick Timiraos, who is one of the Wall Street Journal's like best reporters, apparently he came out and he says he thinks it's going to be 50. Now, when Nick speaks, this is a guy you want to listen to. He has a lot of sources. He has a lot of people that talk to him. If he says 50, the market, you know, like the market, he could literally move the market based on what he says. And so I think there is an argument, if you just believe his sources, that 50 is going to happen. And that's honestly why I think the probabilities right here. Let's refresh this and see if it's up. Probabilities are 65-35, went down just a little bit from 69% in the morning for 50 bips. That could also be an argument for why, you know, where the market's pricing in 50 just based on his sources. But tomorrow we're going to see. And tomorrow's going to be very, very important to ultimately see how this plays out. Another update we have on Amazon. I think this is another reason Amazon stock is up right now outside of the Intel partnership. Amazon CEO Andy Jassy sent a memo to employees and he said, hey, you guys have to come back to the office. We are now working 5 days a week. So my question for you guys in the chat, especially for the people that work from home and people that may be in the office right now, is that a good idea for Amazon? Let's do a poll on that. Is that a good idea for Amazon? I thought there were a lot of mixed results yesterday on Twitter. Some people saying the people that work from home are going to get annoyed by this and they're going to be less productive if they have to come into office. A lot of other people saying, hey, to create a real culture, like you have to have people in the office. So curious what you guys think about this. 5 days a week, is it necessary or not? You know, I'm curious kind of how you guys think about this as well. I kind of think it's bullish because at the end of the day, you got a lot of people that are coming in, you build camaraderie inside of the office and like hopefully that creates more productivity. But I also think there's a lot of people that are just like, dude, if we've been productive, the stock's been going up. It's not like we have to be in the office. And so, you know, Jassy might be pissing off a lot of the senior execs that just don't want to come into the office. Palantir right here, down about 1%, $36 right here, seeing a little bit of a sell-off. Again, when we say Palantir is red, I just want to put it into context. If you bought at 36.50, you might be upset. But Palantir is up a lot right now. So every time I say it's red, I just want to put into context, like, red is very subjective here because, I mean, the stock ran from 30 to 36 basically, or 37 in the past 2 weeks. Before S&P 500 inclusion, it was 29.50. So, I mean, even if we fall back to 31, again, you will get no complaints out of me. At the end of the day, I think it's more healthy if we consolidate, we take our time. We don't need to have some dramatic GameStop type of run. That's probably not healthy. It's only going to result in a fall of epic proportions. So if we normalize in the mid 30s, that's great. If we fall back into the 30s, that's fine. If we fall back into the high 27s, that's fine. I think it's going to be hard to get into the low 20s. If that happens, that'll be a great dip opportunity. But at 36.03, you know, judging when it goes down is just hard to be like, oh, Palantir's tanking. It's like, well, is it really? You know, is it actually tanking right here down at $36? Okay, 52% of you say good, 48% of you say no. Interesting. Chris says, so many great talented people want or need flexibility, but the new flex work is 10 to 4 p.m. Overall, the best way to attract and retain the top talent is to have hybrid flex approach. I would agree on that. I think there's probably a lot of people that don't need to be in the office just to be in the office, especially if you're productive at home. Like if you're productive at home, I don't know if it's that important. You got Eric right here that says totally necessary. Get the F back to work. Mark says it's a job, not culture. Screw culture. A memo like this is designed to shake employees and cut expensive. Interesting. Maybe this is a memo that's designed to kind of find out who are the weak links and to just like fire them if they don't agree with this policy. Tesla right here up about 2% of the day. That could be an argument as well. S&P 500, 564. You got a little bit of a red candle there, but we are still close to some of the levels we had this morning as well. Some of you guys saying you're more productive at home as well. Yeah, I look, I agree. I think that is very, very fair. Office work is so 2010. Doug says we are sold all this networking communication devices and software that we must have to do our jobs, but we aren't allowed to use it and have to go to the office. Yeah, a lot of you guys have mentioned in the chat that like you can't pull up YouTube if you're at work, or you can't put up Twitter, and your office kind of firewalls a lot of those websites. That is annoying. I'm not gonna lie. That is definitely like, if you, the thing I hate about some of these offices. I was watching a video yesterday of like some product manager and their day in the life, and they have this open office where it's not even a cubicle. Their screens are just open. So like they're in the office, they have 3 screens, and it's just like anyone can walk by and look at their screens at all times. And you may be saying, well, you're not supposed to be doing anything on your screens if you're in the office. And I'm like, yeah, but sometimes like for 2 minutes, if I check CNN, or if I check Fox, or if I check Twitter, or if I check, I don't know, if I check, if I have my messaging open or like my email, like having that just like exposed to everybody is kind of weird. So if I was in the office, I would like to have a cubicle, but having those like desktops that are so live, I don't know, it feels like definitely a little bit lack of privacy. But I guess you could say maybe that's an incentive to just get people to not do anything on their screens that they're not supposed to be doing. But yeah, I don't know how this policy is going to go. Maybe the market's up right now because they like that Jassie's being a little bit more aggressive here. 187.81. We got to get through the Bezos wall of 200. Once he's done selling about $5 billion worth of stock at 200, I think Amazon can moon. But unfortunately, he's still there. Palantir right here below 36, 35.99 right now. And it is red. Treat them like adults. Yeah, I agree. I feel like it's micromanaging to not have that type of privacy, dude. Like at the end of the day, people need to feel safe where they're working, and not like everyone's staring at every little piece of work that they're doing. But I don't know. That's my perspective. Not being able to do anything personal at any time during work is soul sucking. Yeah, and look, at the end of the day, if you're a good employee and you get your job done in the allotted time, I don't see a reason why you can't, finish earlier or something like that, right? Like if you get the shit done, you get the shit done. It's not supposed to be that controversial. But then again, I think they're going back for this whole team camaraderie culture thing, which is why Jassie's doing this right now. Adobe at 522. Robinhood showing some nice strength right here at 2252. Bitcoin went red yesterday, and Robinhood still did well. So Robinhood is showing some strong momentum. And I think the street's getting excited for their October event as well, which that event theoretically is going to show a lot of new products. They did tweet out some weird thing yesterday. I have no idea what this is. If anyone knows, let me know. But they tweeted out this picture with the caption "Who?" with a question mark. I don't know what this is, dude. I have no idea what this is. So if anyone knows, let me know. Like I have zero clue. If someone said this is part of like a sports team or something, I don't know if they're sponsoring a sport. I have no idea. But this is what they put out yesterday. They're introducing multiple products apparently. And so from those multiple products, we'll see some hints of what they're going to be looking at. Okay, I want to show a couple of clips. Here is Jensen. I found this clip of him back in 2023 in November before NVIDIA went off on its run. And he explained why NVIDIA's moat is more secure than most people in the semiconductor industry. Let's take a look at this. His stock is up 150% since then, November in 2023.
This is one of the great observations that we made. We realized that deep learning and AI was not a chip problem. It's a reinvention of computing problem. Everything from how the computer works, how computer software works, the type of software that it was going to write, the way that we write it, the way we develop software today using AI, creating AI, that method of software is fundamentally different than the way we did it before. So every aspect of computing is changed. And in fact, one of the things that people don't realize is the vast majority of computing today is a retrieval model, meaning just all you have to do is ask yourself, what happens when you touch your phone? Some electrons go to a data center somewhere, retrieves the file and brings it back to you. In the future, the vast majority of computing is going to be retrieval plus generation. And so the way that computing is done is fundamentally changed. Now, we observed that and realized that about a decade and a half ago. I think a lot of people are still trying to sort that out. It is the reason why, people say we're practically the only company doing it, it's probably because we're the only company that got it. And people are still trying to get it. You can't solve this new way of doing computing by just designing a chip. Every aspect of the computer has fundamentally changed. And so everything from networking to the switching to the way the computers are designed to the chips itself, all of the software that sits on top of it and the methodology that pulls it all together, it's a big deal because it's a complete reinvention of the computer industry. And now we have $1 trillion worth of data centers in the world. All of that's going to get retooled. That's the amazing thing.
It's funny because Jensen said this in November 2023. And on Friday, he was at the Goldman conference and basically said the exact same thing. I mean, there really was no difference between what he said in video right here, up about 0.5%. And the market continued to buy into what he had to say. If you believe there's $1 trillion of CapEx spend that needs to be replaced with the modern data center, and that NVIDIA is going to be at the heart with all of that operation, with all the pricing power, along with the energy demand that's going to come from that, NVIDIA at 117 is theoretically cheap, just like it was back at, what, I think $50 in November 2023. So it's not like his argument has changed. It's just that the numbers they put up have become phenomenal in terms of representing the growth against that core thesis. And now the question is, does the market fully believe NVIDIA can live up to that thesis, which would be $5 of EPS by end of 2025? And if they can, I think NVIDIA goes higher. If not, that's where NVIDIA might have a little bit more volatility going into 2025. The cruises are up right now. Carnival Cruise up 1.15%. Norwegian got upgraded, I think, to $25 yesterday. They're up 0.5% on the day. Square is up 1.49%. Verizon is down a little bit today. United up a nice 3.57%. United does not pay a dividend, but it has had some decent capital appreciation right here, up 3.55%, likely because of that SpaceX Starlink news that they're going to be partnering with Starlink and giving free Wi-Fi to everyone, which is going to be exciting. Palantir right here, 36.16. Again, it went below to 35.92, but got a little bit of recovery. So you got the buyers that are still there, ready to buy. We'll see if it flips green throughout the rest of the day. But the buyers are not letting Palantir tank necessarily today. What do you think of ChargePoint stock buy at current levels? I don't like ChargePoint. I've never liked ChargePoint. Yeah, at $1.36, it's a penny stock at this point. I personally am staying away from something like this. They had some excitement back in 2021, but again, they were one of those stocks that again had excitement, but as you can see right here, based on the chart, it didn't really play out in terms of that overall thesis. Also, when it comes to electric vehicle charging stations, I think Tesla is doing a really good job at building more of them, right? And I don't know if you need to bet on an independent company to try to, be the key there. Now, again, maybe there's something I don't know about ChargePoint that's some hidden moat that's more exciting, but I wouldn't buy it just because it's cheap right now, theoretically at $1.36, because they've had a bunch of struggles over the past couple of years as well. DNA officially did their reverse split. Speaking of companies that are penny stocks, so now DNA is up 8% of the day. They introduced some new large language model API in collaboration with Google today. 679 right here after a reverse split, market cap of $377 million. I don't know if the future for DNA is that bright either. I mean, they've really got to show momentum and growth, even with this valuation that they have right now. So not touching this one. But the shares outstanding have decreased to about 55 million. And so you've got a uptick today, but a reverse split happening on DNA. Palantir's down. Pretty certain Peter Thiel just sold $1 billion that he announced. Thoughts? Okay, so first of all, I don't think Peter Thiel sold $1 billion worth of stock just now. I think if Peter Thiel sold $1 billion worth of stock, it would be down a little bit more than 0.42%. Number two, people really have to not freak out when they see that insiders are selling like Peter Thiel. The Barron's headline everyone saw last week is what the media does, right? Palantir's on a surge, and then they say, yeah, but this insider selling. Peter Thiel disclosed that he was selling via scheduled sales $1 billion worth of Palantir in July of 2024. This news is old news. It was a regulatory filing, but now it's a headline because Palantir stock has gone up. So at the end of the day, I don't think that matters. And B, you kind of can't blame the guy. I mean, the stock is up a lot from his average, and the stock is up a lot year to date. So if anyone gets mad at insider selling, it's more so because you personally don't have conviction in the thesis, or you think that you should be selling if the insiders are selling, which if that's the case, then go ahead. But I think insider selling gets misconstrued way too many times, especially if the company is not executing. Like Ginkgo, the reason it was a red flag is because the company was not executing. And because the company was not executing, the insider selling was seen as cashing out. Palantir has made people rich this year. I mean, even if you got in at a higher average than most people, you have become very wealthy based on the amount you put into Palantir. You know, it's always subjective based on returns, but I know people that have made a lot of money on Palantir this year. It is up to you to realize those gains or not. You know, if insiders choose to realize those gains, they choose to realize those gains. If you choose to hold out for longer, then it is what it is. So, I mean, I just don't think insider selling is that big of a deal. And given he's been part of the company for 25 years, I would imagine Thiel's going to take some profits. And so that's kind of the update on him selling. Maybe you got some insiders selling right now as well. That's why it's going down, but we will see that after hours if that plays out. Nvidia right here at 117, Bitcoin at 59,000, S&P at 564, right beneath those all-time high levels at 565, but it did breach that today and it hit a new 52-week high. Robinhood right here at 2258. Robinhood continuing to show more momentum. MicroStrategy last night after hours, they said, hey, we're doing another $700 million in convertible debt to buy Bitcoin. So you're probably going to have MicroStrategy eventually buy another 11,000 Bitcoin coming up pretty soon at probably a $60,000 average. They just bought $1 billion worth of Bitcoin last Thursday. So Saylor is continuously getting ready to buy the dip. And that's what we got going on in the world of Bitcoin. What else do we have in the crypto stocks? Are the miners up today? I would imagine they are. Crypto. Yeah, everything's pretty much up right now. Robinhood right here. Wow, up 4. Oh, no, that's not Robinhood. That's Bitcoin Strategy ETF, 2564. Robinhood's up about 2%, 2264. BTX, 2566. MicroStrategy, 134. Marathon at 16. Cypher is up a little bit. Coinbase up 1.39, and then CleanSpark right here at $9.16 on the day. Thoughts on AI? I've never been a fan of C3 AI. Their last earnings were kind of crappy, up 1% on the day. C3 AI does in one quarter what Palantir is doing in one deal when it comes to revenue. So just not that exciting about it. The news on Palantir today, by the way, for those that missed it, is a multi-million-dollar deal with Nebraska Medicine. I had someone from Omaha actually message me today, and let me read you exactly what he said. He said, shout out to my boy Ryan. He said, it's a very big deal. I'm in Omaha, and Nebraska Medicine is an internationally known healthcare company. When Ebola and COVID broke out, some of the first patients came here for treatment. So this is not just a regular healthcare company. This is one of those larger healthcare companies, similar to the Mayo Clinic that Palantir has an indirect relationship with as well. And then Tampa General gave us a 7-year, $50 million extension 2 months ago. So you're getting a lot of these healthcare companies get suckered into this idea that, hey, we need to understand what we're going to do with our scheduling, with our staffing, with our AI operations. And then they get into these boot camps. They start seeing, hey, it's pretty cool. And then within 9 months, that was announced today, they start partnering with Palantir. Palantir turning green right now at 36.37. And they realize, maybe we're not actually getting suckered in. Maybe this is something we need for the business, and it's actually creating transformational value. So that healthcare vertical, I think, is going to be massive for Palantir, and likely why we're getting some momentum. Kathy Wood did sell some Palantir yesterday. Only 4,000 shares, nothing too crazy, but she did sell, I think, 300,000 shares last week at that $34 range. Yesterday, she sold Roblox, Roku, and Palantir to buy Shopify. I don't know why she did this one. This one's an interesting one. The Shopify one is very interesting. Roblox, Palantir, and Roku, I could understand, taking some profits on those. Shopify is down 3% year to date. Roku, Palantir's up 115%. Roku's down 20%. Roblox up 3%. I think Harley Finkelstein was pretty, the president of Shopify, pretty interesting in terms of his analysis or like the way he explained AI being a tailwind for retail momentum. I do think Shopify has an AI angle, even if they're not an AI play, but I'm curious why she dumped Roku, which was the majority of the dump right here, 153,000, to go into Shopify. So maybe she thinks Q3 earnings are going to be really strong for Shopify, and that's why she's buying it. But Roku is down 20% year to date, whereas Shopify is down only 3%. Now, again, on Roku, she's holding a bag. She's holding a big bag on Roku. Roku is, I think, the number 2 position in the portfolio, or number 4. And she's down a lot on it. I think her average is like 150 or something. Stocks at 63. Usually when we see Kathy offload a position in the tunes of hundreds of thousands of shares, like she's beginning the legit offloading of the position, right? It's not just like, hey, I'm selling this to buy this. Hey, I'm like actually getting rid of this. She did this with Zoom. She did this with Teladoc. She did this with Path. If she does this with Roku, then she is officially out of the like big 4 COVID names she invested in. And some of that money is going to be reallocated to other names. Maybe one of those names is going to be Shopify. Where's Tesla right now? Is Tesla still green? Tesla is, yeah, wow. Tesla's 3% on the day. Tesla's green. Tesla is still green right now. SaaS names are relatively flat on the day. Snowflake at 113, Datadog at 112, CrowdStrike at 269. Out of the Mag 7, Apple is still the only one that's down. The rest of them are up. Tesla's leading the way, up about 3% right now. So Jeremy from Financial Education did sell about 45 grand of Tesla yesterday. I did see that. And his logic was essentially that he thinks the stock is getting overpriced for the lack of growth, is what I heard, was kind of like his core argument. These are shares he bought for like $2,000, so he's up a lot. Obviously, if he's selling it for $45,000. But from what I understood, the core thesis was Tesla's getting overvalued for the growth. It's an interesting argument. Here's the actual, someone had a summary of it right here. He still has a lot of Tesla, so it's not like he doesn't have Tesla. But his argument was slowing growth, valuation concerns, delayed product launches, Elon's distractions, and other opportunities that have upside potential. I think these are all fair arguments. I don't think these are, necessarily irrational reasons to sell the stock. It is interesting though. He's kind of selling the news on 1010, basically. He's selling the news on 1010. So not buying Tesla before 1010 basically makes you think this is the pump right now. Oh, Jason will be on today after hours for Technical Tuesday, so we'll get through his analysis on Tesla as well. But if you're selling Tesla right now, you kind of think 1010 will be a flop in terms of the stock, even if it's a good event for the company. And this is the pump that you're taking advantage of. Wow, S&P 500, 565.92. Holy crap. Are we about to hit? Oh, we did hit 566. Wow, we hit it. We hit 566 today. That is officially beyond the 52-week high, the all-time high we had on the S&P 500 on July 16th. Where's Robinhood? Robinhood should be liking that right now. Yeah, Robinhood 2265. There you go. Robinhood does indeed like that. Robinhood likes that a lot. Hey, it makes sense. It makes sense. I mean, S&P up right now. Retail sales data was good. Again, if you, the argument for retail sales data being bad would be that you just don't believe in it, which is fair. But the past 3 months have revised to the upside, and that's why it seems like market participants are believing in it right now. It is interesting that we are getting this momentum before the FOMC meeting. One argument could also be the market thinks we're going to get 50. And if the market thinks we're going to get 50 and the market likes that we're going to get 50, and I get this is the point I made yesterday. I think the market is going to be like upset we get 50 for the first 5 seconds, and then it's going to hit them, and they're going to be like, oh, holy crap. Federal funds rates are now down 50 basis points. Like, we've been so restrictive for the past 2 years. We are finally down 0.5%. Oh my goodness. IPOs can open back up. M&As can open back up. Business lending can open back up. Money can start leaving money market funds. Like, all this momentum, it's not going to happen overnight, but at least the market can start internalizing and pricing all this in. Now, I'm not saying the market hasn't priced that in already, but 50 would officially confirm to them that this is happening. And maybe the market thinks today that we're getting 50. But you have no idea, dude. I mean, we've seen so many of these moments where market's excited and the market's not excited, and the market, sells off aggressively like 2 Fridays ago, then the market recovers the next week. So we'll see what happens tomorrow. But it's going to be a very, very big day in the context of how the Fed chooses to create a trajectory around rate cuts. Tesla right here up 3.1%. So Tesla likes this. Is Enphase up right now? Okay, Enphase is green. Enphase is up 3%. This makes sense because they're getting ready for rate cuts. SolarEdge is it's up 2%, but it got downgraded by JP Morgan to $17. SolarEdge was $103 December 2023. Now it's at 22. So SolarEdge has just not had a good angle. Enphase as a competitor to them, they've done a lot better. I mean, they've also fallen badly, but they've held up. The SolarEdge has been taking a little bit of a hit. Amit, do you think SoFi pumps today? I don't know. I think, again, if we get 50, that's very bullish for SoFi. I would imagine SoFi likes that. So 820 makes sense that it's in that $8 range. We got to bust through 850 and close above it to really solidify the 8s for SoFi. Look, rate cuts are bullish for SoFi. There's no way to go around that. So if we get the rate cut, I think that's good. Or if we get confirmation of rate cuts, that's good. Now it's just waiting for that confirmation. Congrats to all TNA holders. Yeah, I mean, if you hold TNA triple leverage, I'm going to guess it's at like 57, 43. Okay, I'm a little bit too aggressive there, but 43.67, up 3.26% on the day. For the week, it's probably up so far 8 or 9%. Given IWM's up like 3%. So yeah, small caps right here, 220, 228 is the top on small caps, up 1% right now. They are obviously pricing in a little bit more of a broadening based on that rate cut. There you go. S&P at 566. Look at that. Qs are not following as aggressively, or are they? S&P's up. No, actually Qs are more aggressive than the S&P. Yeah, Qs are so the tech is up 0.76, S&P's up 0.59. And that's probably because of Tesla and Nvidia, but Apple, if that was up, the Qs would be up even a little bit more right now. Qs bottomed at 420 as well. S&P bottomed at 510. Both Qs now at 476. S&P at 566 on the daily. Sarah opened a $90,000 position in Robinhood this morning. Interesting. Okay, look, I think 25 is my fair target for the end of the year. So I like below 25, and I've been pretty consistent about that the whole year. I like below 25. I think it has a shot to get there. Wow, Robinhood 22.74. All right, so now you're seeing some real momentum. 2.39% on the day. Cracking 23 would be amazing, dude. Cracking 23 would be amazing. This is the one that I bought the dip on. This is the one that I took whatever cash I could find and I bought the dip on this thing, held my nose below 14. Yeah, it was at 14 is when I got the price. I increased my position by about 11% that day, and I just bought it. I just shut the hell up and I bought it that day. So for those that bought anything on August 5th, I mean, likely you've done very well, but this is the one that I chose to get. And now we just got to see if we can end up the year right on the S&P. And if we can, maybe we have a pretty decent year. End phase right here at 115, S&P 565.87, Palantir 3602. So Palantir still down 1% of the day. No reversal yet. We are red. 1030 slam. We'll see in 15 minutes if 1030 the market kind of takes us back or not. But overall, pretty green day. Affirm, look at that, up 2% as well. Affirm's doing well, which is not too bad. Jeremy also sold Nvidia last month, and now it's saying he wants to buy back in. He said it's now cheap where he said he sold. It's expensive and growth is limited for the next 2 years. I think a lot of people kind of did the same thing, dude. I think a lot of people's horizons on Nvidia. I mean, we saw this with Chris, right? Good friend of the channel. Chris said, hey, Nvidia's going to 50. And then he was like, actually, I was wrong. The Oracle numbers are so substantive that it's hard to deny where Nvidia's going. And now his price target is closer to 150. So I think over the past 3 weeks, people have had a change of heart if they were bearish on Nvidia. Not everyone, but a lot of people have just realized the growth is not slowing down. And then it's just a question of, hey, do you think 46 PE on a forward basis is cheap to end up buying for Nvidia? Victor says, I started my Hood position at 15 when it dipped because you opened my eyes to it. Good. I like that. I mean, Hood is the one stock outside of Palantir this year that I've had massive conviction on. Really, my portfolio this year is Palantir and Hood. And it's been nice to hyper focus on two companies. Like when I mean hyper focus, I mean like know these companies inside and out. Like, I mean, there's very little questions I think I can't answer about these companies. Like I study these companies a lot. And although I talk about a lot of companies on the show because I like talking about stuff and getting information and condensing data, and we do a lot of macro analysis, those have been the two companies this year at least. And next year, the goal is to build out Tesla. Based on how this year ends, next year, the goal is to build out Tesla. And if that happens, I might have to buy it a little bit more expensive than what I could this year, but that's okay because we consolidated into Hood and Palantir this year. But that's the goal for Tesla. Let me check Robinhood resistance right here. And then I kind of like it. Robinhood, Palantir, Tesla. I kind of like that as a long portfolio. I want to get two others to round it out, but I really like those three as a long portfolio. I think I get the wealth transfer, I get AI, and then I get FSD and robotics. Robotics is the call option. FSD is the thing that I think the more and more I hear from it, people are saying it's very real. 23, we have 15,000 shares for Robinhood at $23. And so I don't think that's crazy. Do I have NVIDIA? No, I don't have NVIDIA. And I kind of wish I had more NVIDIA, but again, the consolidation this year has been Robinhood and Palantir. So it was really a question this year of, hey, how do I want to position my portfolio? Do I go deep into a couple names or do I spread myself thin on many names? And I went deep on two names. And, at the end of the day, I'm in capital creation mode versus preservation mode. So I think sometimes you really got to take a little outsized risk. We got Arnie in the chat. Arnie knows what it means to take a bit of an outsized risk. Arnie has literally 100% on Palantir. All of it is all in Palantir. So Arnie has outperformed everybody this year. Unless you were 100% in NVIDIA, I don't think you've outperformed Arnie. Also, this is without options and leverage. This is all pure stock. So, Arnie being able to just go all in on Palantir, it's done very well for him. And so sometimes solidification works. And there's other moments where diversification is better, but both strategies, I think, have their own vital elements to it. Yeah, Garcia as well, friend of the channel. Some of you guys may not know Garcia, but he's on Twitter. If you just type in Garcia Palantir, he'll pop up. He's like one of the best Palantir meme creators in the community. And he pretty much went all in on Palantir as well. He has a couple other things, but like Palantir's his heavy position, and he's done very well. So this year has not been too bad for going all in on it. Now, granted, I'm not saying we're not at elevated levels. I'm not saying we can't have a pullback by the end of the year, all that stuff. I'm just saying solidification has not been the worst strategy this year on certain names. Tesla right here still up 2.6%. Amazon up 2%. Palantir still down a little bit, and Apple still down. SoFi 823, getting a little bit of a break on SoFi. Qs are up, and then IWM at 220 on the day. Did I double down on Figure? I did not double down on Figure. Dude, Figure is either going to be a hit or miss. Figure is either going to print $10 million for me one day, or Figure is going to zero. It's one or the other. There's no difference. So we'll see what happens with Figure. I forget even Figure is like part of my net worth. I forget it even exists. I just hope one day it returns to me. If humanoid, ARK put out this research, dude. I mean, again, Kathy, it's hard for me to. She says so many things, so it's hard to always get so worked up about it, because now you kind of get desensitized to it. But she put out some research, and she's like, "Hey, humanoid robotics are going to put out $24 trillion of revenue." Figure is a private startup I invested in that is a humanoid robotics company. ARK says generalized robotics represents a potential 24 trillion global revenue opportunity, which means the market cap of the main players, aka Tesla, which is the main player. Let's put Figure to the side for a second. I mean, dude, if Tesla's getting a piece of the $24 trillion of revenue, let's even say 2 trillion out of that 24 trillion in revenue in the next 20 years. If the company's doing 2 trillion in revenue, the market cap is going to be it's just unfathomable, right? So either you believe this or not. I do believe this. I did a really good breakdown with, what's his name? I'm forgetting his name on my channel. Let me pull it out. Cern Basher. And I'll put it in the chat if you guys want to watch it. It's a good hour-long breakdown. He goes through the numbers and he really breaks it down. The numbers kind of seem a little unbelievable, but it is true. And he agrees. He thinks look, this is a multi-trillion-dollar market, and it's a bull case for Tesla as well. But I just don't know. It's unknown, right? Is it actually going to happen? Is it not going to happen? We just have no idea. Here's the video for those that want to watch it. It's a good deep dive. He does a really good job diving through it, but you have to see if those numbers end up playing out. Did you know how long the boot camp was for Omaha? I'm curious how long it took them to decide that AIP was going to work for them. Sorry if you reviewed that already. So I don't know how long the boot camp was. Oh, but so in the press release, if you read the press release, they did say it's 9 months of not boot camps, but of the partnership. And I think they had a couple months of the boot camps based on how I'm interpreting the press release. So I would imagine that within 9 months, they came to the deal, but within those 9 months, they obviously had multiple boot camps, and those boot camps ultimately led to them signing up with the deal. A boot camp, from my understanding, is a couple days to a week. It doesn't go beyond a week, maybe for some clients, but it's a couple days to a week. Palantir right here, $35.94. And then, in those couple days, the client ends up seeing a real, working piece of software with their own data, and then decides if it makes sense. Yeah, here's the press release. In its series of targeted boot camps, Nebraska Medicine took less than 6 weeks to put out a new workflow. Okay, so then you could argue the boot camps were over the course of 6 weeks. They got that workflow into production, and then in 9 months, they officially signed a deal, which is just incredible, dude. Just imagine that scaling to thousands of healthcare companies. Now, it's going to be hard to scale that boot camp model, but if Palantir can do that, which is the whole point of AIPCon, to show off the customers, that a lot of them coming from the boot camps, there's just a lot of room to grow. I think Palantir is going to have an NVIDIA quarter. Arnie asked a good question on Twitter yesterday. He said, "Hey, do we see Palantir ever getting to 40% growth?" And I think yes, dude. I think that's absolutely going to happen. I don't know if it's 2025. I'm hoping it's like close to the end of 2025 or maybe 2Q, 3Q 2025. But I think we're getting back to 40% growth like we were in 2021. And when we get there with the new momentum on Palantir, with the book that Alex Karp is coming out with in February, I just think Palantir is going to be one of those things that the media cares about a lot more and people are going to get excited about. Bitcoin right here, 60,000. Not bad. I think Bitcoin is getting ready for 50 bips of cuts. I think Bitcoin is getting ready for 50 bips of cuts. And that's the only reason I can say why the market's mooning right now. I think it's those 50 bips of cuts. And I think that's doing well. What are your thoughts on Intel? No position in it, but the news yesterday with AWS was bullish. Intel right here up about 3%. But I still think there's a lot of operational challenges and questions on Intel. So if you're buying Intel, you're definitely, taking a risk. It's not like this is going to be a massively simple recovery play. Now, if you have a lot of conviction on it, then sure. But I think there's more questions than answers right now, which is what it's supposed to happen when a stock is down so much. And that's why the risk reward is asymmetric. But yeah, no position for me right now. I think we need more clarity on what they're doing with that Foundry business. Karp has a book coming out. Yes, February 2025. I think it's called, what is it called? It is called The Technological Republic. And it's a critique of Silicon Valley. I think it's going to be a fire book. I think he's going to go on a book tour. And I think people are going to get excited, dude. I think people are just going to get very, very excited. And so yeah, that'll be coming out later in February. Intel right here at 2172, IWM at 220, Palantir regaining 36. Wow, Bitcoin 3.66. Bitcoin getting some love. 3.6% up. Robin at 2285, not bad. 23 would be very bullish on the day. Let's see. Not bad. Bitcoin 60,208 right now. There's repetitive backbreaking jobs that humans can't do and a lawsuit nightmare for the company. Robots will definitely replace all of that, I believe, Kathy. Look, I believe robots will replace humans as well to an extent. I just don't know what the timeline looks like. That's why I'm saying Figure, dude. It's a $25,000 investment I put into Figure at a $2 billion valuation. Either Figure goes to $1 trillion or 500 billion or some ridiculous number because humanoid robotics literally is taking over the world and they're like the number 2 behind Tesla, maybe the number 1 ahead of Tesla. I don't know. We'll see what happens. And that 25,000 is going to turn into a lot of money. Or Figure goes belly up and they can't compete with Tesla in the manufacturing. Figure can't raise more money to be able to compete with Tesla's vertically integrated supply chain. Or the Tesla Optimus is just better than Figure's robot. Or the Optimus thesis, the robotics thesis just doesn't play out. So there's a lot of risks to the investment, but it's going to take a decade, I think, for that to even figure it out. The Figure CEO really stands out to me. He seems really scammy on Twitter. Yeah, I know people get those vibes. Look, at the end of the day, I like him. I can understand how people think he's scammy. I'm not going to disagree with the people that think he's like giving a little bit of a scammy vibe, but I think he's just him. He is who he is, and you can't change him. Some of the stuff he tweets is very interesting to me, but at the end of the day, it's his company, dude. This is what I'm saying. When you invest in a company, you invest in the CEO, dude. Like I can't text the guy and be like, hey, don't say it like this. My money's there. I hope it works, and I hope he does his thing, and we'll see what happens. Amit, do you ever have an intuition that hits so hard you feel stupid for not following it? That was Hood on August 5th for me. I bought plenty, but man, the leftover scraps I didn't buy are making me feel bad. Yeah, I mean, look, that's fair. I think August 5th, everyone, if in hindsight I could go back and buy some more Palantir 20, I agree. It's just, dude, I took whatever money I could find, like literally whatever money I could find, and I dumped it into Robinhood. And that's it. And again, I have some Robinhood options, so the return on those options is a bit more better than just buying pure stock of any company. And the option prices I was getting, they came back to look. I bought options of Robinhood in February. The prices I got on August 5th were lower than the average price I bought in February. And so when I saw that, to me, I was like, okay, I'm taking an asymmetric risk here, but this is way better than buying stock in any of the companies I like because I already have positions in stock. I don't literally need to add to that stock. But if it just goes back to normal, which it was at 2 days before the yen carry trade collapsed the entire economy, then I think these prices are asymmetric. And I know a lot of people felt that for other prices that are for other stocks that were in as well. I mean, look at SoFi. SoFi went to below $6 If you bought options on SoFi for even $7 by the end of the year or by 2025 when it was below 6, that has done very well. Nvidia went at one point almost below 90. And so, what the options probably were mispriced, but also just the pure stock itself. Right there on August 5th, we had 91.20. Now it's at 117. I mean, there were some really amazing prices on August 5th. And my question now, Palantir back to 3613 error, is are we going to get those prices again? AKA the market's going to collapse, or do we just pull forward? And we're going to kind of have to see, how that plays out. So this is a good thing that you're bringing up, though. I'm beneficial about you could pull some strings. My mom, so we're going to India, right? And my mom, she was telling me, I'm going to sell some of my stocks to like, to like pay for some stuff for India. And I was like, no, like, I will like lend you the money. Like my sister has some cash. Like we will give you the money. Do not sell your stocks. Like don't sell your stocks. If you look, I am very blessed to have a sister and family members where if I needed to borrow some money, they're not going to be like, oh, well, you need to give me 5% interest. And like that in Indian families, that's just like not the culture. Like it's just like, look, we have each other's back. Right. So I think my mom needs to, borrow $3-4 grand. I'm like, me and my sister will make you whole on the $3-4 grand, but do not sell your Robinhood that you bought at $16 just because you need to take it out of your brokerage and then pay for some stuff going into India. So I think if you can find a way to avoid selling stocks, especially if they're in a good space, and borrow, obviously, if you can luckily borrow at 0%, that's important. If you have to borrow at 14% or something, like obviously don't do that. I don't think that's the best dynamic there, but it's tough to sell positions just to be able to pay for stuff. So if you have access to some liquidity, even if it's just family members, I think you should take advantage of that because there's no reason to sell off yielding assets that are compounding just to pay for certain bills. Man, you're already back to the States. How long did you go? No, Dinesh, I'm going to India October 5th. I haven't gone to India yet. The way I avoid selling is to keep it out of sight. Well, that's another good situation as well. Keeping some of those stocks just like in a different brokerage itself is also not a horrible situation. S&P 500 right here at 566 on the day, which is not bad. And again, look, I know some people don't have family members that are willing to like lend them money and like not care about when they get it back. But if some people do, you got to take advantage of it, dude. If some people do, because like there's not a lot of places where you can get a loan for literally 0%. I mean, there's some credit cards that offer that stuff and stuff, but if you can have family that's willing to like just give you a little bit of money, now you got to be good for it. Obviously, if you're bad, like my sister knows I'm good for it. my mom, my mom is going to, pay me and my sister back. And even if she doesn't, to be honest, I don't really care. That's my mom. If she needs $3,000, then I'll give her $3,000. So it's one of those things where the culture in the family has to be good enough to deal with that. Where's Robinhood? Are we trying to break 23? 2282. We touched 2290 right here, up 2.66%. 2280 right here, right now on the day. Amid here's an unpopular opinion. Palantir's Warp Speed product will disrupt Tesla's manufacturing advantage 100%. Okay, so not sure if they're going to disrupt Tesla's vertical integration of manufacturing. However, Warp Speed is going to be special. I think we're going to get a lot more information on Warp Speed over the next couple of weeks, but Warp Speed is going to, I think, vertically integrate a lot of American manufacturing in one of the most efficient ways. We've seen hints of it with the Nevada factory that they're working with Panasonic. And we also heard Jack Dobson talk a little about it on the halftime show or the pregame show at Palantir's AFPCon. I think that product's going to be massive. I think that product's basically a new product, but it's taking one vertical that Palantir was like adopting Foundry in, which is American manufacturing, and it's turning it into its own product because American manufacturing has such a big TAM and it's such a big industry. And it goes to Sham's kind of philosophical thesis about bringing manufacturing back to the States. So I think Warp Speed is going to be big. I don't know if it's going to like disrupt Tesla or anything like that, but I think it's definitely going to help a lot of companies that need help with their manufacturing. Okay, let's take a listen to JP Morgan. JP Morgan saying, hey, we might not even need a rate cut. Let's get their perspective and then we'll go back to markets. But let's at least hear what JP Morgan has to say. Here we go.
On the markets, as the Fed kicks off its latest policy meeting, Oksana Aronov, head of that's because inflation, they're ignoring some recent hot numbers as if they've conquered inflation.
Correct. I mean, I think I'd say that a cut is not necessarily even warranted, given that we're not really seeing a broad-based weakening outside of a more reasonable labor market, right? Labor or unemployment rate of 4.3% is certainly well within the Fed's own sort of 5% target, which they consider neutral on unemployment. So
here's the question while she's talking. Do you agree that although the economy is not massively weakening, that a cut is not warranted? Or do you agree with kind of the consensus view that, hey, before the economy massively weakens, we should cut? What side are you on that? Because you know what side I'm on. I think we should cut before things get really bad. But I guess this is their argument around why a cut's not needed if things aren't as bad as they are. That could be projected to be as bad.
So we went from extraordinarily tight labor markets to sort of a more normal. But outside of that, this morning, again, another beat on the retail sales. And we continue to see just broadly the economy is doing fine. These rates have not been as restrictive as the Fed, I think, expected at the short end. And making them less so is going to probably loosen financial conditions further, which are already the loosest they've been since before the Fed started fighting this inflation.
I just don't understand why we can't have a definitive answer to whether we're restrictive or not. So if someone like you can say they shouldn't even cut, other people are saying they're so far behind the curve they should do 75 basis points. Everybody's looking at the same data, and you can come to just completely polar opposite is opposite's enough to say, but opposite conclusions. How does
I think
that happen?
everyone is looking for what they want to see, but objectively speaking, even on the inflation data, right? When we were sitting here in June of last year and CPI year over year was 3%, and everyone considered inflation moving towards 2%, right? We're sitting here 14 months later, and where is CPI? 2.9%. It took us and by the way, there was a lurch towards the high threes.
Okay, it's actually 2.5%, not 2.9.
In between there, right? So I think it kind of goes to show what we've been saying all along, which is that we are going to be stuck in this churn for quite some time. And the Fed's own R-star expectations are moving up, right? From 2.6 in March to the 2.8% more recently. I think that will continue to be the case. So they should move quite carefully here. 25 is probably enough to buy them some time to see some more data. And unless we see really a decisive move towards that 2% inflation, which I think will continue to be elusive for a number of factors, not the least of which is the amount of fiscal spending, which is not going to stop. It's going to continue unabated, irrespective of who occupies the White House.
They shouldn't worry about...
It's an interesting perspective. I disagree. I think the labor market is cooling enough. Those revisions were disgusting. We lost 1 million jobs, folks. Or we didn't lose 1 million jobs, but we never added 1 million jobs, which is kind of the same. So I don't know, dude. I think there is absolutely an argument for why the cut needs to happen now. One thing that is interesting, though, about this entire situation is the perception of how the cut gets interpreted if retail sales data continues to go higher. So, again, ironically, we would expect the futures to show a lower percentage chance of 50 bips. And today, because retail sales data was so good this morning, it's still at 65-35. So the market is saying, hey, we believe the consumer is good. The retail sales data is fine, but we don't believe the consumer is good enough to last over the next, coming months until we lower those rates. And so you got an argument from the market that's basically saying even the reason stocks are up right now is because retail sales data was good. But if we don't get the appropriate amount of cuts, the market doesn't believe the consumer is going to be able to stay good. I mean, how amazing would it be if we lowered rates and people can buy a Tesla again without worrying that much about the finance costs, right? It's not going to be like that easy. It's not going to be as cheap as it was back in 2019, but it will be cheaper than it was at the top of 2024, even 2 months ago. So those prices starting to come down just creates a bit of more capital spending, a bit more liquidity into the system. Money market funds, some of that money decides to start to leave even a little bit more. And you start to potentially say we're nailing a soft landing. The only risk to this, which is what I think she's talking about, is the acceleration of inflation. And if you take out shelter, if you look at trueflation, inflation's at 1.7%, and shelter's always been lagging. So I don't know. It's just if those things don't hold up to be true, then I think we'll be all right. But the market's got to start to figure that out at a much broader scale. The housing market needs those cuts. Yeah. Did you guys see mortgage rates, dude? Mortgage rates today came in at just above 6%, down from 7.3. Or I think it was at 5.89 in some banks. Like, we had mortgage rates start to come down. Now, mortgage rates are coming down because of the expectation of cuts. Cuts haven't happened yet. But even the housing market is starting to think, all right, it's time to get this over with. And if we don't get the cuts like she's saying, the market's going to be in a very wonky position in regards to the fact that we've already priced in a lot of the stuff that the market's asking for. I still kind of think it's 25, but I'm like convincing myself as I talk that it's going to be 50, but I don't know, dude. It's one of those things where I don't think anyone knows. We have inflation updates for Canada. So the annual inflation rate in Canada deaccelerated for the third month to hit 2% in August of 2024. Wow. The softest since February 2021. I don't know if, this is the central bank's target. So Canada follows the United States, or the United States follows Canada, whichever way you want to interpret it. And they both had a 2% target for inflation. Canada hit it today. And markets thought it would be 2.1%. We came in at 2%. The United States, we have 2.5. I think we're probably going to get closer to 2.2 by the end of the year. Yeah, you can't have the Fed's funds rate at 5.5. It just doesn't make sense. At that point, it just doesn't make sense. All right, let's get an update on CNBC, and then we'll keep going from there.
So for the first time, for example, parents can monitor who their kids are talking to, as well as a sleep mode function that quiets notifications from 10 p.m. to 7 a.m. Here to discuss the impact, Meta's global head of safety, Antigone Davis. Welcome, Antigone. It's good to have you.
Thank you for having me.
So you say that this is a fundamental reimagining of what parenting online looks like and will affect tens of millions of teens. How exactly does it work?
Yeah, thank you. It is actually a fundamental reimagining. The way it works is this. We've heard from parents that their top concerns are the amount of time their teen is spending on their phone, the content that they're seeing, and who they're connecting with. And we have built in protections that are automatic that address these specific concerns. In addition, if a teen under the age of 16 wants to change these settings, they've got to get their parents' permission.
How does it deal with the threats of harassment, inappropriate content, depression, all of those things that came up in that unfortunate hearing where Mark Zuckerberg apologized at the beginning of the year?
Well, let me detail some of the protections. I think that'll answer your question. We will be putting teens automatically into private accounts, all teens. In addition, they'll have our strictest messaging restrictions. They also will be able to see less inappropriate content, and notifications will be turned off in the evening. In addition, parents can actually turn the app off in the evening between 10 p.m. and 7 a.m.
Okay, we're going to move on to some macro analysis, but put in the chat if you think that Meta is actually going to protect teens. I mean, this sounds like good protections, but will they actually implement it? Will they stay true to it? I don't know. Meta doesn't really have a history with that. So put in the chat if you think these are actually going to be legit changes. Here's some updates on retail sales and rate cuts.
There's been a lot of job owning out there and people thinking. I think that whatever happens tomorrow, the bigger question and uncertainty for the investors is, what is the path? Are they going to 2%? Are they going to 3%? Are they going to 4%? We're at 5.25% right now. That's a little bit more unclear. What is the direction of travel here? And then the market can figure out how we're going to get there.
was saying that yesterday during our interview with him, right? The dots are going to be very important.
Dots are important because that's their forecast for how many more.
Of course, their forecast can change too. So
they change every 3 months.
Not like we hold them to it, but
they change every 3 months, and they haven't exactly been the most accurate, but sure. And then just a reminder, because this is circulating around all the desks and all the notes today, what happens to stocks after the first rate cut? Everybody wants to know the playbook.
Yeah.
And it just matters whether we go into recession or not, because here's the Goldman chart. Recession after the first cut means that stocks are under pressure.
Man, growth scare looks really good, though.
Growth scare looks really good, and that's really just normalization. It's a better economy. It's a soft landing. It's all the things that we think we're in right now, and that's where stocks go up. And then here from Bank of America, they give the exact sort of 3-month and 6-month view for what happens. Obviously, stocks lower in the hard landing scenario by several percentage points, and then soft landing, which would be the best case over a 6-month period. You almost, you get a 10% move in stocks. That's, again, history, which may not repeat itself. We're going into an election. There are all sorts of funky things happening, but that's your historical playbook.
People are on the hunt for an analog where you begin a cutting cycle with stocks at all-time highs.
Mm-hmm.
household net worth at all-time highs, growing 7% a year, and corporate profits growing almost double-digit. That's an odd time to start cutting rates.
Right, because you usually cut into a downturn. I mean, they usually cut when, and they are worried about the softness that they're seeing, but this recovery has been stronger than anybody expected. And I think that the question was, they hiked because of inflation. And now, is inflation in the rearview mirror or not? I think they might be a little more cautious about inflation coming down to target, although Canada went down to target.
I was going to say, Canada's at 2.
I knew you were going to say that.
And the Blackstone CFO last week says the headline's more like 1.7 if you mark-to-market shelter.
But then you have, Jamie Dimon and now BlackRock overnight, the Institute saying, there's still so much spending fiscally coming into this economy. Maybe it won't go all the way back down to 2%. We still got the Infrastructure Act and the CHIPS Act and the Inflation Reduction Act, and all that's going to maybe add a little bit more to the economy than previous cycles. I will say, though, we got the Bank of America Fund Manager survey, and probability of a soft landing is still very high. It's 79%. The number one tail risk scenario, though, even though most people don't expect this, is a recession and economic pain. And that's
the one thing that ruins everything. Yeah, we talked about we saw that same chart yesterday. If we avoid a recession, it's going to be a good year. If we get into a recession, pretty much all this stuff ends up going away.
Been sort of a moving target. It used to be geopolitics. There are other risks. The election sweep was a risk. Inflation has been a risk, but now it's really on the growth. So market still wants to know, although today's retail sales was helpful on that front.
On that front, let's talk more about the number and the Fed's move tomorrow. Joining us here at Post 9, former Barclays CEO Bob Diamond, now CEO at Atlas Merchant Capital. Bob, it's great to have you in.
Carl,
does this morning's print do anything to change your view?
No, I have been
Palantir just went green
for a while, slower. As you know, from the beginning of the year, we really saw the fourth quarter as the first time that they would cut. Here we are in September, almost to the fourth quarter. My sense is that the biggest single risk for the Fed is to do too much too quickly. So I'm firmly, as Sarah is, in the 25 camp. I think 50 would be a statement that is inconsistent. But most importantly, I think what they should do is only 25. I think it would be, with the markets doing well, with labor doing well, with the economy doing well, that just it creates the risk that we would reignite some inflationary fears. And then, the worst case here is that, in the near term, we have to begin tightening again. So I'm firmly in the camp that what's correct is 25 basis points. And I'm feeling pretty confident that that's where the chairman and the FOMC is as well.
What do you think the roadmap looks like in terms of what a terminal rate will end up being?
It's interesting, two aspects. I was saying to Sarah earlier, we just announced this morning a joint venture with A&D Mortgage, which is residential mortgage space. Why is Atlas Merchant Capital in that space? I think there's going to be a turnaround in the mortgage market. We had $4.5 trillion in issuance in 2021, $1.5 trillion in 2023.
Shout out to you if you got 3% or 2.7 on that $4.5 trillion 3 years ago. Because if you did, you're sleeping well. You're not worrying about mortgage rates.
Obviously, rates were a big part of that, Carl. So I think that market is expecting a decline in rates. My own view is that prior to 2008, when we had kind of 1% rates forever, the average funds rate for decades was 4%. So in my mind's eye, if the Fed continues to ease, to encourage a soft landing, if inflation stays under control, then I think the terminal level for Fed funds is probably around 4 and 4.5%.
That's so interesting. So the argument he's making there is that for decades, we had a terminal Fed funds rate of about 4%. I believe this was after the 1980s with everything that happened with Volcker. In 2020, obviously we had, 2008, and then we had the pandemic. We went to zero, and then it's basically been very low for the past decade. I wonder what the next decade of economic growth looks like with rates the way they are. We've been able as a society in the United States to handle, as he said right there, 3 to 4%. And I know a lot of you that are older in the chat, you're used to much higher interest rates. So like 5.5% is kind of like a joke, even though it's a new paradigm because we were at 0% for so long. But it's not like we haven't lived without high interest rates before, or at least like moderately tamed interest rates above 3%. So the question is, the market's pricing in 200 bips going away by the end of 2025. Do we need a United States economy that requires less than 3% federal funds rates to be able to grow top line GDP at least 2% year over year, given this new economy that we're in? I don't know. I mean, like we've been able to grow for the past couple of years with rates way above 3%, but also we're seeing the cooling of the labor market, and it's getting to the point where everyone's like, all right, it's done, buddy. We had this little fun experiment. You got to play in the sandbox, J-Pow. Now it's time to move on. So I wonder, how aggressively do we have to cut over the next couple of years and then sustain rates at a certain level to not accelerate inflation while also maintaining top line GDP growth? I mean, I don't know. I don't think, does anyone have a number on what that should be? 3%, 4%, 2%? Like, what is that number? I think we're in unprecedented times, given how much money we printed in 2020 and given how quickly we raised rates, and given the fact that we have all these tech companies. By the way, a lot of people, I mean, deflation. You got tech companies having AI is going to be, to some extent, deflationary. So with interest rates that are even 3 or 4% in this new economic era that we're in around deflation with AI, along with the deflation we're getting from China because they're exporting a shit ton of deflation because their economy is struggling right now. Does 3% make sense in that world? Does 1% even make sense in that world? I don't know. I think over the next 24 months, we're going to have a better grasp on what it looks like. But it is interesting because we've dealt with higher rates for longer. It's just, now we're getting back to where we were, at least hopefully a couple of years ago, which still is zero. So even if we're at 2.5%, it's still above where we were back in 2020. Seems like a bunch of you got these low rates at 2.7. We got Jason with 2.875 on 1.3 million. Anthony got 2.65. Dude, shout out to you if you got the low twos or the low threes. I mean, it's pretty incredible. Pretty incredible. Wow, S&P 566.4. If we hit 567, that'll be a hell of a day for the S&P 500. That would be a hell of a day. Okay, I want to ask this question to the chat, and I want to make a Webull list based on what you guys say, based on the top, like, call it 10 tickers I see are going to make this list. This list is called Best Rate Recovery Play, or even just Best Rate Play in general. Put in the chat the ticker symbol that you think should be added to this list that you believe is going to do the best when we cut rates this over the next, call it 6 months, over the next 6 months. Put it in the chat. And the tickers that I see the most repeated, I'm going to put onto the list, and let's see what people say. Because I want to reference this list at the end of the year, and I want to see which was the one that outperformed from what everyone said. Chris, you can't keep typing in CCL. We're crowdsourcing this. I'm trying to get other people. Chris was like, CCL. This guy. All right. We're going to put CCL in there because Chris has typed it 50 times. I see a lot of Open Door. So let's do CCL. Let's do Open Door. I'm seeing SoFi in there. Let's put in SoFi. ABCL. All right. Accelera. That's one a lot of people don't talk about. Let's put in that one. Affirm. I like that one. Hood. Yes. I think Hood can get in there. Rocket Lab. Okay. I guess we'll put Rocket Lab in there. I'm surprised no one put any mortgage companies yet in here. I'm surprised no one put in Rocket Mortgage or anything like that. What else? Enphase, I'll put Enphase in there. TLT, I definitely think TLT should be up there. Is TLT up today? No, TLT is flat on the day. Yeah, I guess we'll put IWM in general. IWM should be there. What else? I got to see the repetition of some of these. And don't just put in any ticker. Put in a ticker you legit think when rates get cut, it like that stock has a chance to go up. UWMC. All right, so we got the mortgage play. I see a couple people putting in that one. That one's down a little bit on the day. Pinterest? Really? Pinterest? BPYPN. All right, we got to put that for Chris. Chris gets two of them. BPYPN. Brookfield Property. All right, so Brookfield's there. That's up 2% on the day. I think we're allowed to have 16 in this, so I can add like 5 more. I'm going to put Tesla in there just to put in Tesla. I don't know if Tesla's going to benefit the most, but let's put in Tesla there. I think Tesla's more contingent on 1010 than rate cuts, but we'll put in Tesla. Zillow, I like that one. I like Zillow. I don't love Airbnb, but let's throw it in there. Maybe that helps people travel more or something, but I don't think that's the issue they're having with. Upstart, Upstart's an interesting one. I think we can put in Upstart, but Upstart, they just did an offering today, or yesterday, which is, oh, wow, they're up. Wow, they did a $300 million offering and they're still up. Holy crap. Can I add more? Okay, I can't add more. Okay, so we're going to do 2 lists. We're going to have 2 of these. So we have best rate play number 1, and we're going to have best rate play number 2. Number 2. Or second list. Okay, so we'll do another 16, and then that's it. That's 32 stocks, just because I want to get some more in there that you guys think. Wow, Upstart's actually up today. I did not expect that, dude. I did not expect Upstart to be up after $300 million offering. Elf, Lulu, Fubo. Okay, Fubo we'll put in there. Again, we're gonna look at this list at the end of the year. Lulu, or we could probably look at it every day, but really, after the rate cuts is when it matters. Carvana, I like that one a lot. Used cars should definitely catch a bid. I think they got upgraded. Yeah, they're up 3% today. They got upgraded by JP Morgan to 185 the other day. We already put Open Door. BYON. What is BYON? Beyond? This is not Beyond Meat, right? Is this? I don't know. This is Beyond, is an American online retailer headquartered in Midvale. Okay, I'll put it there. I don't really know what that is, BYON, but we'll put it there. Okay, we'll put Beyond. That's not Beyond Meat. What else? RKT, we'll put RKT in there. D's, you thought that was funny. I'm not falling for that. Okay, I'm not falling for that. Smart enough to not fall for that one. Okay, what else? We got like 8 more. Disney. All right. I guess we'll put in. I don't know how rate cuts really helps Disney other than people going to the parks more, but we'll put in Disney. I'm not putting in Nuts, Jed. Goodness gracious. Micron, Shopify. Yeah, let's do Micron. Let's do Shop. I'm surprised we don't have too many semi names, but semis have already ran so much, so I understand why. We're not putting in Mayo. There's no such thing as Mayo. And even if there was, we wouldn't do it. MSTR, yeah, a lot of people didn't mention the crypto plays. MSTR should be there if Bitcoin gets a little run. Etsy, I guess we'll throw Etsy in there. Even though I like Shopify way more than Etsy. Rivian, I don't hate Rivian. I don't think that's horrible, but I think Rivian needs to get a gross profit margin that's not negative. Okay, last thing we'll end it off with is Ulta. We'll add some more if we think about it. But these are the names. So these are the names you guys are thinking. These are basically 30 names that we're looking at as the best recovery plays. Oh, I also want to put Lennar in there. I think Lennar, home builder, that might have a little bit of momentum as well. So we'll put Lennar. And you don't want to put the Mag 7 here because I think the Mag 7 can do well, but you want to put names that are a little bit under the radar and names that are a bit more sensitive to rates. And so that's what we got. Yeah, it'll be interesting, dude. It'll be really interesting. I'm gonna be very curious to see which ones actually are the ones that benefit from the rate cut. I think a lot of them are priced in for rate cuts. I am shocked. Upstart is up right now, dude. You would think a $300 million offer. This just shows you how much the market wants rate cuts. Dilute by 300 million. Stocks up 5%. Stocks up, I think at this point, 70% in the past 3 months for Upstart. Like rate cuts are so bullish for them in regards to lending. And then, if you want to give them a little bit of an AI thematic because it's AI-based lending, then there you go. S&P right here at 565.85. Tesla's still up 2.3% on the day. Palantir's green, 36.39. Palantir's green. Bitcoin as well, 60,340. That can definitely get you some momentum. We'll put PLCE there because you keep typing it, Tesla, but I have no idea what PLCE is. But we'll put that one up there as well. PLCE. I'll look into that one. I have no idea what that's. Wow, it's up 23%. What the heck is this? Why didn't you tell us about this stock before it went up 23%? PLC. What the heck is this thing? Children's Place. It's down 34% year to date, up 23% today. Children's Place is an American specialty realtor of children's apparel. Oh, it's in New Jersey. It's where I live. It sells baby clothing. They do $1.7 billion of revenue. Founded in 1969. Interesting. Okay, I don't know why it's up 23% today. Maybe they had some news, maybe earnings. But all right, we'll keep that on the list as well. Oh, Redfin. Yeah, we should put Redfin on the list too. We should put Redfin. Can I put more? Okay, I can't put any more, but we'll keep Redfin up there. Redfin. I think all the real estate companies. Yep, Redfin's up 2.9%. Is Rocket Mortgage up today? Rocket is up 1.23%. Zillow should be up today. Zillow's up 0.5% or up 1%. And then what's the other one besides Redfin? There's another real estate play. Matterport. Is that one up? Oh, wait, but didn't they get bought out? Matterport got bought out a long time ago, right? Matterport got bought out. I don't know if Matterport still is even a thing. Yeah, I think they got bought out a long time ago. Yeah, Matterport's not a thing, if I'm not wrong. But I think the real estate ones should definitely have some momentum. NVIDIA right here at 117 right now on the day as well. All right, not bad. Let's go back to that interview. Let's get an update on rates, and then we'll keep going from there. But those are the tickers we'll be looking at. And if we really have too many more, we'll make a third list. But we'll be looking at these tickers over the next few weeks.
It's interesting, all the banks getting out of the mortgage business. You're going into the mortgage business.
Absolutely. It's the time to do it. And, 2/3 of all those residential mortgages really are done by the agencies, about 1/3 by banks in the private sector. So 14 trillion in residential mortgages. And it's a small sector that's the banks and the private market. And much like private credit, I think private companies like A&D Mortgage are going to continue to take a bigger slice of what the banks typically have. So I think that portion of it, the portion that goes to the banks, will increasingly go to the private sector.
You're investing in it, or?
Yes, we're doing a joint venture. Right? Yes. So, how can we help them? I mean, they've been doing this for 20 years. They're fantastic at origination. We can help them with the bond buyers. So securitizations, expanding the list of buyers of the securitizations. And then we have a fund called the Imperial Fund, which buys some of the residuals and finding investors for that. So we're very much on kind of bringing more clients and customers in so that we get better rates.
And see, the only reason he's thinking about this is because rates are coming down and there's more capital spending that'll make joint ventures like that even possible. Let's get an update on Intel and see what's going on there.
Foundry subsidiary, agreeing and seeing the great progress that we've done on these cost measures. All of these align us to the future that gives not just finishing the journey that we started together 3.5 years ago, but also assuring that we have the financial wherewithal, the balance sheet that allows us to finish what we started.
That was Intel's Pat Gelsinger on Closing Bell Overtime yesterday, breaking down the news that the company's creating a separate entity for its foundry business, a structure that could allow it to raise outside funding. Company also announcing 2 major deals. First, an award of up to $3 billion from the government to make chips for the Pentagon, and then this expanded deal with Amazon Web Services to produce custom chips for AI. Although, as we mentioned earlier with Jim David, the B of A, the AWS win sounds impressive, but Intel had already been supplying them with CPUs for a long time. Customization, in their view, isn't exactly something new.
No, there's a lot of sort of debate about exactly how specific it is to your point. A foundry deal for Intel to make custom chips, or though is it more of a custom design and collaboration on new silicon designs, I think is a question here. I'm not sure we have the absolute answer. I mean, nobody thinks this positions Intel in some sort of a completely new way to be kind of an emerging threat to anybody. At the same time, we know the difficulty that Mr. Gelsinger has been navigating in terms of forging a future for this company, in terms of new foundries and in terms of new iterations for the chips, requires a lot of cash. And on that front, Sarah, there does seem to be at least perhaps some relief that they're not going to have to sell Mobileye or Altera at Lowe's to fund their ambitions right now.
Maybe that's part of the jump in the stock. And this is still a stock, just to remind you, that's down 55% year to date, and a lot more than that over a longer term period.
Who's dabbling in Intel? Who's actually taking a dip? I know some of you guys got into it, but is anyone actually seriously considering Intel? I think it's an interesting one. I just think there's more questions than answers right now before you get a ton of safety with it. Wow, it's up 6%. It's getting some momentum now. 22.17 here on Intel. Look at Palantir. 36.44, baby. Let me check the resistance on Palantir. Palantir is not trying to take a break. 36.45 right now. Resistance at 37 is 27,000 shares. Not a lot, dude. Volume is there, 32 million. It's a lot of volume, dude. That's it, and it's not like 300,000 shares waiting at 37, and we touched 37 already. So could it happen again? Yeah. 36.50. There you go. That 36.50 level is nice to get above. Not bad to see. June says she's bag holding Intel. Some of you guys are thinking of it. Remember that kid who on Wall Street Bets put in his grandmother's inheritance of $800,000 into Intel at $30, and it fell to like 18? I wonder if he keeps it over the next 2 years and Intel goes to 50 or something, and it ends up being a good investment with just like a little bit of short-term volatility. Like, imagine he invested at $30, didn't look at it for 2 years, which is, if you're long-term investing, you're not supposed to be monitoring it literally every single second, right? Micromanaging. You're supposed to give it time to play out. And then it goes to $50 and he's up $20 a share on like 23,000 shares. That would be a very successful investment. It's just in the meantime, the shit you have to deal with. I think that's what was August 5th for all of us. Like, all of us kind of knew, hey, these are not bad companies. Like, they don't deserve to be getting punished the way they're getting punished on August 5th. But if you kind of just close your ears and hold your nose and buy the dip, or just don't look at it, and you wake up one day later, you might not be in a horrible situation. And it'll be funny if that happens to the dude. That kid would be 22 years old. And if Intel's at $50 in the next couple of years, which is not going to be easy for it to double in 2 years, but if that happens, is 800K is going to be over $1 million, which is not too crazy. But obviously, Intel's got to execute for that to happen. Savage 2, thank you for the $5 super chat. I have called different spreads for January 2026, $30, $31 on Intel. I took a play like you did on Robinhood because Intel is too big to fail. So $30 by January 2026. Basically, you're giving yourself a year for the stock. You want it at $31. So 31 minus 22. You're betting that it will go up 41% in the next year. I don't think that's impossible. But I do think, Intel's gonna have to show a lot of execution for that to play out. Remember also, when you do like a leap or any type of option, you're looking for a narrative that is going to help it. My leaps on Robinhood, when I bought them, the narrative primarily was crypto re-ramping, and then a bull market would be good for Robinhood. I did not expect them to innovate the way they've innovated this year and host 2 events, one of them coming up in October. All that stuff, I really couldn't have imagined that would happen, but they just, executed really, really nicely. For Intel, you've got to be sure there's a narrative between the time of your stock and the option expiration, not just for Intel, for any stock. Wow, look at Bitcoin. It might hit 61,000 right now. Holy crap. In which that narrative plays out. And so that's the only thing I would say for the option is like the narrative's got to be there for A, for the stock to get to that price, and B, for the market to even think that buying it is makes a lot of sense. The thing I didn't do, which I talked about on the show before, that is a mistake, is I didn't buy leaps on Palantir when it was $7 for like $15 or $20. I mean, dude, May of 2023, when Palantir was $7, you could have bought a $15 leap for January 2025. Again, it's all contextual. You could have bought it at the wrong time. All this, I get it, but like those, it's like at that, and I didn't really understand options at that moment. Like I really just didn't get. I like just knew you buy the stock, hopefully it goes up, you make money. Like it took a long time to kind of understand what even is a call option. Like you're buying the right to exercise the contract to own 100 shares at a strike price. Like even that basic explanation I didn't understand at the time. But for those that did, I mean, you guys are absolutely printing on those. Absolutely printing on those. All right, what else do we have? August 5th, rock so hard, still pissed at my brokerage. I bought Hood that morning once I finally got in. Yeah, dude, Schwab was not being the best. Although Schwab's metrics did come out yesterday, and this is why I think Robinhood has so much room to grow. Dude, Schwab added 300,000 accounts last month and $32 billion of assets. Robinhood is barely adding 50,000 accounts per month, and they're adding like $3 billion in assets, in net deposits. So it's like, dude, Schwab is so big. There is so much opportunity. And I imagine Schwab gets most of those new accounts because I think, correct me if I'm wrong, I'm sure a lot of people in the chat can actually have experience with this. When you get a job, your 401k or your stock options are tied to a Schwab and Fidelity account. It's not tied to a Robinhood account. So, if companies are hiring people or like people are getting stock options, all of that's being facilitated via Schwab and Fidelity, which is why they get to aggregate so many hundreds of thousands of people every single month in terms of new accounts. Robinhood has like organic growth literally based on word of mouth. So if Robinhood can ever integrate into that part of the world, which is, partnering with Facebook. And so when a new employee joins Facebook, they can choose to have Robinhood as their brokerage. Bitcoin right here, 61,000. There you go. I think that's a big room for growth, but I think that's how Schwab maintains a lot of their momentum. Same thing with Fidelity as well. It depends on the company. Some people have Fidelity, yeah. But for all my friends that have stock options, none of them use Robinhood because like Robinhood's not integrated into, corporate America, 401ks or stock grants or anything like that. If they do, I think that'll be super bullish, and that'll be a very easily recurring way for them to get assets and deposits. But that's something Schwab and Fidelity have a big monopoly on. Palantir 3650 still green. QQQ 475. TNA, wow, up 5%. That means IWM should be up 1.2 or something. Yeah, 1.6 on IWM. Robinhood 2280, Nvidia 117, Tesla 232, S&P 565, still holding that level. FOMC is tomorrow. FOMC is not today. FOMC is tomorrow. 2 p.m. We'll see what happens with FOMC. Stocks are doing okay. That led me to get a bank account at Schwab. Yeah, I would imagine, dude. I mean, if all your stocks are in Schwab or Fidelity, you're probably going to use some of their other products. And again, that's why the organic growth in Robinhood is so impressive to me, because like they're competing with some big dogs, bro. Like Schwab and Fidelity are no joke. Like those are big dogs that just suck up so much money. So for them to still be growing close to 40%, even with that, is just incredible. Zillow is up a little bit still right here. And then you got Redfin up 4.3% today. Nvidia right here at 117. Right now, where's SoFi? Is SoFi still up? SoFi 825, up 2.3. Up 2.3. Still have my SoFi options. I want $9. I think $9 is possible. I think we can get it. If we can get 9, that would not be really not bad. Matthias says, I'm surprised the market is so active today. Prior pre-FOMC days were kind of everybody just waiting around. Market is hyped for tomorrow. Yeah, and I think the market thinks they're getting 50. And I think the market likes it. I think the market likes that they're getting 50 and they're like they like at least think 50 is a shot. Will we get 50? I don't know. But the market, I don't think you go up this much unless you think like 50 is on the way. Maybe there's a sell the news tomorrow. I don't know, but this is definitely the market saying, "Hey, we like retail sales. Give us a cut, and things can keep going forward." All right, we have Anduril, the company I was talking about yesterday, private company. They just introduced some new products in the defense space. Let's take a listen to what Palmer Luckey has to say and what these products ultimately will be for the trajectory of the company.
Palmer, it's just making it ever more easy, fewer parts, and making it quicker to make.
Well, I think that having fewer parts, easier to make, that's downstream of the real goal, which is to make sure that the United States, our allies, and our partners around the world have the tools that we need to deter expansionist dictatorships like China. Right now, in a lot of war games, we are modeling the United States as running out of critical munitions, particularly missiles, in just a few days of conflict. Anduril, for years, has been working to build a family of systems that solves this. And we just announced that family of systems today. It's called Barracuda. It's made with half the parts in half the time, using 95% less tools than a lot of the existing missile systems on the market. It is a mass manufacturable product that is designed to be made at scale, many thousands of systems at a time, because that's what the United States need. That's what our allies need. It's what our partners need.
Talking of partners and allies, drone AI over in Ukraine at the moment. You're supplying drones, we understand, piloted by AI, but how much is it AI? How much is it the human? How much autonomy do they have about targets?
Well, in our case, it's all about AI. Our core product is called Lattice. Anduril Industries has been working on AI-powered weapons for about 7 years now, and the core software is Lattice, this brain that powers all of our different systems, including Barracuda, including Altius, including Ghost. Which
Lattice is the software element to Anduril. It is a defense hardware manufacturer, which is why their margins probably suck. But the software component to it is, I think, what their moat ultimately is, and why they keep winning all these contracts.
are in Ukraine and have been since the second week of the war. We've destroyed hundreds of millions of dollars in critical Russian hardware that can't really be destroyed by things that require a real-time link to a person, because the Russians are quite good at jamming communications links when it comes to things that are important to them. They don't have enough of these jammers to hit the entire battlefield, but that's why it's so important that we keep taking those things out and eventually, hopefully, leave them helpless to these types of systems.
Palmer, it's great to have you back on Bloomberg Technology. You know, in the context of Ukraine, I'm kind of thinking about the existing work, and then, you know, what we're hearing from Ukraine at the moment, which is they kind of want to push deeper or strike deeper into Russia. Does Anduril have any technology where you would work with Ukraine on that goal or be a part of that process?
Absolutely, with the caveat that these decisions are not up to us. It's up to the United States government. They decide who we sell to, how we sell to them, and to a large extent, what they do with these weapon systems. And I don't think that Anduril or any private defense company, any private company, period, should be in a position where we're de facto controlling the United States foreign policy position by saying, oh, we would help with this, we would help with that. I think that we need to put that decision with the people who are supposed to be making that decision, which are people who are accountable to the electorate. In other words, you should not trust me. You should not have to trust me. You should trust somebody that you can vote for and then vote accordingly.
We're showing images of the Barracuda system, and at the top of the program, you talked about allies. And so when I think about scalability, is that because you want to be in service of any specific allies beyond the US government? What is the sort of benefit of the scalability of the design?
Well, this gets into the little bit the philosophy of it, but I'll tell you how I think about things. I don't think the United States needs to be the world police. I think we need to be the world gun store. We need to be able to provide our allies and our partners around the world with the tools that they need to turn themselves into prickly porcupines that nobody wants to step on. And I think that sending American lives overseas, boots on the ground, is not going to be the future of how we support our friends around the world. I think it's going to be making sure that we can make things at a scale where they believe that our support for them is more than just words. We can actually send them the things that we say that we're willing to send them. I think Ukraine has really exposed this weakness in the United States foreign policy strategy, where we say we support all of these people, but they look and say, well, they can't even manufacture the basics like artillery shells or you know, small missiles. How could I possibly count on these people to be able to cash these checks that they're writing? And I think that Barracuda is a response to that largely. It's something that was designed from the beginning for low cost, high rate manufacturability. And it's a flying operational system right now with multiple customers. I think that partners are going to be able to trust that Barracuda is something that we can actually make for them and deliver to them when they need it, not just now, but also if a conflict were to erupt.
And you're delivering by manufacturing ever more in the United States. And with money, talking about cash and checks, you've just recently got a whopping valuation of $14 billion by raising more money to build in the US the Arsenal One and other manufacturing units. Can you update us as to where they might be, these sprawling manufacturing areas?
We just closed a huge round with our investors. It was all of our previous investors coming in.
Would you invest that $15 billion for Anduril, hardware defense contractor? Would you invest that $15 billion?
And a whole bunch of new strategic investors who want to help us build a lot of things, but particularly Arsenal One, which is a 5 million square foot factory that we're building that is going to create thousands of jobs and build vast numbers of AI-powered autonomous weapons systems. And it's not just Barracuda, it's actually the entire product suite of things that Anduril makes. It's all of our missiles, it's all of our drones, it's our submarines, it's a reconfigurable factory line that is able to share a lot of the equipment and tooling between these programs, which gets the costs down and it gets the rates up and the benefits flow on to our customers.
All right, we got a bunch of people saying yes. So we got a bunch of warmongers in the chat, which is I'm just kidding. I think I would probably invest too as well. I don't think their margins are going to be amazing. They don't really have a commercial business, but if they're the next Lockheed Martin at 15 billion, Lockheed Martin's at about 120 billion. If they even, get 3-4x or even 60-70% as big as them, that's still like a 2-3x on the investment, which means maybe not the worst investment. Here is that Barracuda system that he was talking about. I mean, just on the sheer innovation of what they're doing with these missiles alone, it does seem like they are, if you're betting on defense contracting, if that's the industry you want to kind of bet on, it seems like they're ahead of some of these other companies in terms of innovation. Now, they're obviously not ahead of these other companies in terms of manufacturing, supply chains, vertical integration, because Lockheed Martin, Raytheon, they do so much. But I don't know if they're innovating the way Anduril is innovating in terms of the speed and time to value of creation of these larger missiles. Robinhood right here at 2290. And so 15 billion, I don't know if they're profitable. I don't know what their margins are. I would imagine investors are buying it simply because they think it is going to be very important in future geopolitical conflicts. And if you believe that China's invading, if you believe that Russia's going to get only more aggressive, then you're going to need a company like Anduril. And valuation at that point maybe isn't the biggest concern for the people that are investing in that IPO round. So we'll see. They do not have a working model yet. Yeah, I imagine it's going into manufacturing right now. I don't think they've actually built it out yet. But we have seen other products they've built over the past couple of years. And I mean, they have very much been in high demand. Anduril also, if you just look them up on the DoD website, they have gotten a lot of contracts. And a lot of these contracts they're getting because the government wants like a cheaper way to build a lot of this stuff because it costs less for them to buy it. And Anduril is showing a lot more efficiencies than other legacy manufacturers when it comes to building some of this stuff. Palantir 3660. So you got green on Palantir by about 1%. Bitcoin definitively above 61,000 right now. Not bad. 61.2. Maybe this is the moment Bitcoin needs to officially break out of where it's been stuck at. The rate cuts hopefully do unlock the liquidity that takes Bitcoin to higher levels. We'll see what happens. But Bitcoin right here, 61,272 right now. Also, the 1.5 billion is going to a massive gigafactory type manufacturing facility. Yeah, that's another thing. The 1.5 billion is going all into manufacturing. So it's not like that 1.5 billion theoretically would go to waste. For those that don't know Anduril or Palmer Luckey, he made Oculus in 2014. Meta bought it for $2 billion. And then he used to work at Meta, and then he donated to Trump, and then Meta fired him, and it just became this whole political thing. And then he just said, screw this, I'm done with social media. He really loved virtual reality. That was his first love. And he built it with his bare hands. Like, he had a Kickstarter to get the original funding to build Oculus. Like, this guy is just a serial entrepreneur in terms of bringing his vision to reality. And then he started Anduril. And I think it is a company. The only hesitation I have with them is that I don't know what their commercial business looks like. And so if you buy them, you're buying, in my opinion, the next Lockheed Martin, which has upside, but it's based on the valuation, but it's not like $1 trillion upside. It's not $500 billion upside, unless there's a software component to Anduril that will create software margins and recurring revenue that we aren't thinking about. But I think on the sheer innovation alone that they're building, a lot of the company is built by Palantir alumni as well. I mean, most of the co-founders are Palantir alumni. So it is something I think would at least be worth the bet. We need to add Moody's to the rate cut list. Rates dropping could drive tons of refinancing of debt, aka more ratings business for Moody's. That's a good point. Moody's right here is down on the day. Is Moody's up this year? I haven't really looked at this stock. Moody's, that's a good point though, Austin. Moody's stock year to date is up 26%. No, so they've been able to thrive. I'm actually curious about this company. That's a good point. This is one of the names that tells you if you are a AAA rating or you have junk bonds or all this stuff. So Moody's, along with S&P Global, they're one of the core companies that issues these ratings that people take seriously. I would imagine rate cuts probably could be bullish for them as well. Where's the S&P? So we're done with the 1030 drama. S&P still at 565, about an hour after 1030. Still going okay. S&P at 170, or NVIDIA 117. Robinhood 2280. Robinhood peaked at 2290 so far. Bitcoin still holding 61,000, up 5.3%. And then you got Palantir right here, green on the day, 36.50. Tesla up 2.5. Amazon 187. Is Apple still down? Wow. I mean, Apple's basically flat, but it's still kind of red. On a green day like this, for Apple to be red means that the street really is upset about this iPhone 16 demand story. They're just not happy about it right now. They are not happy about that. And you can't blame them, man. You can't blame them. It's a 34 PE. It's an expensive stock. You need the growth to kick in. You cannot blame the street for being a little upset that we're not seeing continued iPhone 16 demand. Celsius is even up 5% today. Look at that. Starbucks down a little bit. Alibaba's up 2%. Cruise Lines up 1.6 with Carnival. Google at 160. Uber at 73. Walmart down just a little bit on the day. SoFi at 825, and then S&P, or not S&P, IWM at 221. Amit, are you buying any puts to hedge the FOMC tomorrow? Nope. I am raw dogging the S&P, or not the S&P, the FOMC, which rhymes with S&P. Basically raw dogging the S&P because if the S&P crashes, everything crashes. And we're just going to see what happens, dude. Literally this whole year has been like, let's just go until the very end and see what happens. And we're doing it, dude. We're going to go to the end. We bought the freaking August 5th dip. We're going to keep this going, and we'll see. I think we avoid the recession. If we avoid the recession, I think we're good. If we don't avoid the recession, yeah, shit's going to hit the fan. And maybe, you know, this little bit of euphoria of some of this data that we're getting and the bad data is going to happen in the next couple of weeks. I don't think so. I think the data ends up being all right. And based on all these companies and what they're saying on earnings, it just doesn't seem like companies are really struggling that much. And at the end of the day, Q3 earnings to me determine the market. And if Q3 earnings are good, then I think we'll be okay. Tech is helping us avoid a recession 100%. Tech is absolutely helping us avoid a recession. But again, that's what it should be doing, right? Like if tech is so important, if NVIDIA is selling so many chips, if OpenAI is worth $150 billion, then technology should be massively expanding margins. It should be helping top line GDP. It should theoretically be creating some deflation, which is helping with the accelerated inflation we had all year. And we should be, benefiting from tech. Question simply is, will the rate cuts and the unemployment levels match up to the growth we're seeing in tech? Is Meet Kevin still bullish or bearish? Has he flipped yet, or is he still bearish? I think he's still bearish because last thing I checked on one of his PP notifications was he sold out of everything. Yeah, so on September 10th, he sold Apple completely, sold Enphase completely, sold Amazon completely, and he sold some of his Ubiquity. So he closed out Apple, Enphase, and Amazon. I think he's still bearish. I think he is still bearish. He is hedging his prediction so he can say he was right. I'm just curious when he flips, dude. I'd just be curious to see what his logic is when he flips, if he does flip. Because look, whether you agreed with me, Kevin, or not, he did present a lot of data for a bearish case. And I don't think anyone can sit up here and say the data wasn't worthwhile to listen to, even if you didn't agree with the ultimate conclusion. So when he does the flip, if he does the flip, I'm curious, what is the data point that got him to really think, okay, some of the data I was looking at was wrong and this data is correct? And given how convicted he's been in on the data, it would take something really important to get him to feel, no, I was wrong. I'm looking at different data. And so I'm curious to see if that does happen. All right, folks. I think that's it. I think that's pretty much it. We got a nice market right here. IWM, when IWM's up 2%, it's going green. SoFi up 2.3. Robinhood, let's see if we can break 23 today. If we close above 23, that'd be super bullish. 2284 right now on Robinhood. I know a bunch of you have been messaging me that you've been transferring your accounts into Robinhood. I think deposits are going to be well, and I think they're going to continue showing momentum. Palantir went green after falling below 36. The market, Carp sold 4.5 million shares today, and Palantir is still up almost 1% today. I mean, people want this stock, dude. The liquidity is there. The liquidity is there. That doesn't mean this is the best price, but it does mean that liquidity is there. Tesla's at 232, Roku's at 75, Microsoft 436. Microsoft was at 410 a couple weeks ago, so Microsoft also having a nice rebound. Again, $60 billion buyback, increasing the dividend. MicroStrategy at 138. Is Rick up today? Wow, Rick's up 4%. Rick's up 4%. So the friend that called me last night and told me about Rick, if you guys missed the segment, if you go back to the 26-minute, 19-second mark of the market open, it'll be in the chapters. You can find out what Rick is about. Look, I don't have a position, but the company has 9 million shares. It is a small cap at 413 million, and 10% of the float is short. Don't have a position. If I get a position, I will let you guys know. There is a small dividend at 0.61%. But interestingly enough about this stock, for those that don't know too much about the TLDR, is that it's a holding company for strip clubs, basically. It was at $96 when the market bottomed in December 2022. And I was on the phone with my friend last night, and I was like, dude, why were people going to strip clubs in December 2022 when rates were rising and the market was like bottoming the stock market? Why were people still going to strip clubs? And why was it at the top? And then as rates continued to rise in 2023, it started to fall, which makes sense. So I understand why it was falling, because obviously rates were increasing aggressively, and it's a small cap, right? And they do have $250 million in debt. So half of their market cap they do have in debt. Now that's long-term debt. I don't think the debt's that big of a deal, but the cost of borrowing will go lower as you cut rates, which is why I was thinking, hey, is this kind of like a rate play to some extent? But they do have $216 million in debt. Market cap's $413 million. But I was wondering why in 2022, when we had 2 quarters of negative GDP growth, were they at a top? Like, I couldn't make sense of it. I really couldn't make sense of it. So this thing did peak when the market bottomed, and it went down as the market is recovering. So the explanation for it going down seems to be that rates went up, and if rates come down, maybe that accelerates their momentum by lowering their cost of capital and also getting more people to go out to these nightclubs, and that creates more top-line revenue. That is the thesis on this one. Don't have a position yet, but looking at it just to say, hey, maybe there is some rate cut potentially of a play there. But it's also, dude, at the end of the day, it's such a small cap. Like, it's under 500 million. It's like, and it's only 9 million shares, so it could be manipulated. That's why I'm just like, at the end, I usually stay away from this stuff, but at least exploring a little bit of what this looks like. Also, I don't even understand the company. It's been a day of me doing the research, so I don't even know if management's like trustworthy and any of that stuff. So if you want to do DD into it, go ahead, but not fully sold yet on the vision. But I like it as a proxy. And the friend that called me last night, that I know a lot of you guys probably know who that friend is, even though I'm not going to confirm his name because he said to not confirm his name. It is a proxy into the fact that we might be back if people are going out to these nightclubs. All right, Robinhood at 2283. You've got Palantir at 3651, S&P 500 565.3 on the day. That is it for me. Let's do the word of the day, and we'll be back at 3:45 with Technical Tuesday. We'll have Jason back, and we'll have plenty to talk about in terms of looking at a bunch of different tickers and their TA. All right. I have never seen this word before in my life. Catawampus?
Catawampus.
Okay, I got that right.
Catawampus.
It means askew. Okay, I don't know what the hell askew means, so we're going to look that up now. Askew means not in a straight or level position. Okay, so catawampus is not straight. I don't even want to look at the chat because I already know what people are going to say. The construction workers left the beam in a catawampus position, causing concern about the building's stability. The painting hung in a catawampus way, making it look out of place on the otherwise neat wall. I actually really like this word. And I know people are already going to make fun of me for really liking this word because this word is not straight. But could you imagine, like, could you imagine, like, you're in a conversation and you're like, you know, you're with a friend or something, and you're just like looking at something and something's tilted, and you're like, man, that's in a really catawampus position. Friend straight looks at you like, what the fuck did you just say, bro? I'm like, look, it's very catawampus. Like, it's catawampus. Your friend's just like, get the fuck out of here. Amidst bricks are laid in a catawampus manner. I would agree. They're real bricks, but they're laid in a catawampus way. Dude, I like this word because it basically means like not straight or like tilted, or like you could use it as an adjective, right? Like that person had very catawampus thoughts on, whatever they're talking about. I like this word. I don't think I'm gonna. I usually forget the word of the day. I don't think I'm gonna forget this one. Yes, we see the gay jokes. I knew, dude. As soon as I realized I said not straight, I was like, goodness gracious, I know what's about to happen. I like this word, bro. Has anyone heard of this word before? Be honest. Has anyone heard of catawampus? Jarrett says he's used the word before. Where is Grindr, by the way? I haven't checked that stock in a minute. Are we up on Grindr? Is Grindr up? It's up 1%. It's at 1231. I mean, to be honest, it hasn't really moved in the past couple months. I liked it at $9. It never got there, but yeah, Grindr at 1231. It's up 44% year to date, but the run was really from $8 to $12. I like it. I like catawampus. Some of you guys are saying yes, dude. There's no way. There's like 10 of you that said yes to that word. There's no way you've used the word catawampus before, bro. There's just no way. There's no way. Used it in the South. Who in the South is using the word catawampus? Use the word a lot at work. Could you imagine typing a corporate email to your like boss or to your like to someone you're managing? You're like, look, your slide deck was very catawampus. You didn't really get to the point of the presentation. Like, I'd be like, what? Oh, I got to take a picture of this. I transferred $267,000 to Robin yesterday and got a 1% bonus. I'm taking pictures of everyone who says that. So let's take a picture of that. Seems like a lot of you are transferring into Robinhood. Catawampus. Dude, you know what that word reminds me of? I can't play because YouTube's going to copyright the stream. It reminds me of this. Let me see if anyone thought about this. Let me see if anyone thought about this. It reminds me of this. It reminds me of Wumbo from SpongeBob. I can't play the clip because YouTube's Nickelodeon's going to get mad at me. But if you guys know Wumbo, if you guys know this clip from SpongeBob, catawampus reminds me of Wumbo. It reminds me of Wumbo. There it is. There it is. There you go. There you go. Sounds like a Dr. Seuss character. Yeah, 100%. It actually does. It actually does. Okay, that's it for me. 3:45. We'll be back. We'll be with Technical Tuesday, so we'll go through all the technical stuff. Get your tickers ready. Today we'll have plenty of time. Last time we were kind of in a rush at 6 p.m. Because we had to go do a Twitter Spaces, but we'll have a good 3 hours today. Go deep into it and keep going from there. All right, that's it. Thank you, everybody. I'll see you guys at 3:45. Have a great day. Hope your day is not super catawampus in whatever respects that you need your day to not be catawampus. And I'll see you guys back at 3:45. Love you all. See you guys in a bit. Bye-bye.